Welcome back to the Trading Den. My name is Greg Secker, your host here, and today we're launching a brand new initiative. We are starting to do weekly market forecasts and market context positioning. What is that all about? Well, it's a new concept that we're bringing here to the Trading Den, where I give you a market forecast every week, show you really what's happening, what to focus your energy, your attention, and most importantly, your trading strategy and focus upon. And that is something we're going to continue doing alongside the quests and alongside the educational pieces that we do on a weekly basis. So we're going to start that right here, right now. What we're going to do right now is get right into how the market is set up right now. I'm going to show you how I set my day up. It's kind of important that you have the opportunity to see how I set the game. For any reason, I want to spend my time now on a weekly basis setting you up on a Monday or a Tuesday, depending on which day I get on, but hopefully the earliest part of the week, to really show you how the week's going to play out, show you how my mind is thinking, and show you where I'm finding opportunities and how I'm setting myself. 65.16. We just grabbed quick in and out, 10 pips. Market was moving quick.
Sup, you have a cool idea, but maybe you don't know what to do with it. Easy. First things first, you
quickly. I did actually adjust this slightly wrong. I have to be hands up and a bit honest here. I meant to go for but between 18 and 22 pips. I kind of finger fudged it this morning because I was doing 10 other things preparing for this session. Only managed to grab 2,650. But again, it's half an hour type stuff. So in, out, big rejection off the fib level, trading those pivot point lines. If you enjoy looking at me doing this in context, please put comments in there or any questions you may have around this, because it's a perfect market condition right now to see that difference of trending to then breakout market. I'm now going to jump I'm now going to leave my major currency pairs. So remember, Euro, Sterling, Dollar Yen, Aussie, Kiwi. They're your five that I like looking at in the mornings. There's always play there somewhere. And I will say this, don't try and get into the market and do something when nothing really exists. And I want you to understand my rationale for doing all of those trades. My next move now is to look at the breakfast breakout. There we are. Okay, so last but certainly not least, we've just crossed 9 o'clock. And as we've done that on the breakfast breakout strategy here, we can certainly see, look, it's that zone, which is that hour, that trading range between 8 o'clock in the morning and 9 o'clock in the morning. Now, look, markets are softer this morning. We know that. You can see that SmartCharts is calling a short here when we break through this bottom of this blue line. The stop, of course, is this red dot above that zone. So if we hit short here, you can see it says, right, Greg, you're targeting $17,000. That's 36 pips. Your stop loss is just above the channel. Perfect trade setup. I love it. In fact, it's very much consistent with anything and everything I'd ever want to do. So this is something I'm absolutely going to jump into in front of you right now. Why? Look at the 50 and the 200. Clearly obvious, isn't it? The 50 is just crossed through the 200. Price is underneath. Can't wait to get this trade on. It is on. I'm very confident with this. We'll see how this pans out. But this is the kind of trade setups that I want you to be aware of. So whilst we haven't got easy trends to pull right now because markets are changing and moving around, we've got to set ourselves up. The window of choice I like to start with those fib levels in the top left-hand corner with a strategy in the top right. I want pivots in bottom left, showing me if there's a break of pivots and a bounce off a Fibonacci, I've got some strength there. I then move over, of course, to my major markets, which of course is UK, and in a few hours' time I can look at the US markets. I won't be doing that. I'm a Euro session trader, and so I'm very comfortable. As you can now see, that market is pushing down further. There is softness. If you look, by the way, you go back in time, you can see the success of these breakfast breakouts. Here's a profit. I think the one before would not have made it, and you can see how well it does just by scrolling back. So that's something I want you to be aware of. It's something I want you to add to your arsenal. You can see if you just go back in time, you can see all of these. And you should be able to make an analysis real quick just by looking at the last 10 as to how many were successful. Those using SmartCharts can do that in a split. I'm going to delete this fib level off here because that is going to be a distraction for you. Let's take that off. And here we are this morning. 1 second. So just going back in time, you can see exactly what this market has. Now, hold on. Let's just hit auto scale. If you ever get lost, hit auto scale and it'll just put you straight back to where you were. Let me just jump there, and this is the market we are looking at right now. And you can see literally in front of us, let's just check this out. You couldn't probably ask for a stronger signal. And these are trades I think you guys are going to want to enjoy doing with me. Market's pushing close to that level. That entry level is 64.12. Going to look to take a run to 63.56. So there's a nice little movement there. Maybe $17,000 worth of profit. We'll check in with that in the next few videos to see how well that one did. If you enjoyed this new style, which we're looking at launching this on a Monday, Tuesday, most of the time it'll be on a Monday. We just had some configurational issues in the studio yesterday, hence why we didn't do this yesterday. But if you're interested in doing that, we'll then look to maybe push that into a live format or just record it and then drop it straight out to you. I think it's going to be something I think you guys could benefit from immensely. Now listen guys, if you like this video,
I want to show you something real quick. Give me 30 seconds to blow your mind. Normally, a trader would pull up a chart and start out by drawing.
Okay guys, I just thought I would take the opportunity to show you the trade working out. We have actually just finished recording, but I just wanted to show you the breakfast breakout. Lovely little morning. As anticipated, this beautiful little trade is working out lovely. I'm on my way. I'm up 12,388 right now, on the way to 17,000, so it was worked out very well. Look, you've got your cross on your 50 over your 200. This is exactly the type of trading you should be doing in this kind of market where, you know, you haven't maybe got big trending opportunities, but you've got markets pulling back. Bloody lovely breakfast breakout. Happy with that. It's going to be a 20 grand morning, which, you know, by all intents and purposes, no one can be disappointed with. Yeah, we're going to let this trade run. When it finally hits the profit target, I'll have made 17,000 alone on the UK 100, which is a great trade. I hope you guys are enjoying this format. And again, if you'd like this video, don't forget to hit like, and if you haven't subscribed already, get yourself on there, because this is going to be a new format for the show where we're going to show you not just how to trade, but we're also going to show you doing it in context to the current market conditions. So we're just going to let this one run. I now have a tennis lesson that I'm going to go to, so hopefully by the time I get back, I've now locked in a nice 17,000 on that. The other trades that I had on this morning have all hit their profit target. My little dollar yen is sitting there just waiting to get going. If you see the sell entry there, loving the high tests you'll notice on there. That's probably now going to pull into a decent profit. I'm very comfortable with that trade. Either way, so market's looking good. Happy with how the day has worked out. We pulled a nice 5 grand on the Aussie, pulled a nice 2 grand on the Kiwi. That's 7. We're pulling another 17 potentially on the UK, falling nicely. That takes us to about 24,000 for the day. And if the dollar yen comes in, who knows, we may hit a 30 grand morning, which by all intents and purposes is not a bad way to start this day. Hope you're having fun out there, everybody. I look forward to catching up with you on future sessions. Thanks very much. Hi guys, good morning. Well look, today is Monday the 15th of June, and here we are again with another market outlook session. We received one incredible load of fantastically positive comments, and many people have been saying, Greg Secker, go live! And whilst we're hooking up the technology to go live within SmartCharts, today is going to be another session like we did last week. I'm going to overview the markets, and I just want to get straight on into it. Lots of movement happening in the markets. Volatility levels are right up. And I'm going to start, as always, with my favorite currency pair, which is the euro dollar. I'm going to jump into SmartCharts, bring up that euro dollar chart that you looked at last week. I want to say this, euro dollar is trading below that big 113 level at 1.13 as that market mood is weakening again. We're seeing that across the Eurozone. Look, there is fears of a second US coronavirus wave. We just saw that in Beijing yesterday. And there is massive Fed pessimism still looming in the background. Now look, after meeting that resistance level, as we know, at 114, so that's 1.14, that's a €1.14 to the dollar, that's fallen over 2 big figures in the last 3 sessions. When I say 2 big figures, that means 200 pips. On Friday, the pair looked like it was ready to test that 112 number, but there is a resistance zone at 1.1225, and that price, it seems it just can't seem to break through that. Now remember this, in the future, there could be some momentum for the price to break lower. If that's to be the case, then the next support is going to be at 1.1150, around that level there. And the risk tone this week will be an important factor. Let's jump into the 4-hour chart, and so you can open up that and see what's really happening here. Notice as I just remove my chart around, here's what I want you to notice. From last week's session into today, you've just seen the euro dollar on the 4-hour chart break through that 50 period moving average. It was bouncing off the 50, but it has pushed through. Now, whilst the currency pair has dropped out of that uptrending channel last week, it's trying to refight to gain some of those gains it had last week, but the probability of it recapturing it is limited. Topping that line could trigger further gains, but it's not happening. Now, your indicators, let's just jump to those for a second. I've put MACD on the chart. I'm going to add the other ones, but MACD is showing us, look, a strong sell signal as we break through the 50. I can add my other indicators on here, of course. We're going to add the relative strength index, useful indicator. We've covered that in further videos. If you haven't seen my video on the relative strength indicator, of course it is on this channel. That's pulled away from those overbought levels, and you can see now tumbling quite hectically towards those oversold levels. So we're seeing that weakness. The MACD level lines have crossed, and of course we're now showing some weakness. If I want to jump in away from the 4-hour chart and look at our pivot chart, and this is going to be really important for you, so just jump in on that right now. This is a short signal. If you look here right now on the euro dollar, it's euro dollar. Could well be the euro Donald, but it certainly is the euro dollar, and you'll see that it's high tested on that 5-minute chart on the 50. I'm going to place a trade on that now just to show you how you can capture some of that momentum. In order to get SmartCharts to behave itself, we use that grab tool. I say behave itself. I like to put the chart where I like it to be. A high test off this pivot line is a nice short signal. I can put a nice short trade on here. I'm going to put the stop, look, above the pivot. I'm going to put entry at market, and I'm going to put my take profit just ahead. So we're saying about 26 pips of profit versus 23 risk of loss. I'm going to take that trade on the nose. I'm going to add that. We're going to track that as the day goes along. You're going to see, obviously, you'll see a tiny loss at the top there. That, of course, is the spread that I've just paid on the trade. But you can see with that breaking the 50 on that 4-hour chart, we've got nice euro weakness. It's important to see if we can capitalize on those movements nice and early. It's about 9:20 in the morning, which does tell us what, for those of you that can remember from last week, of course, it tells us to keep having a look at that main UK 100, that cash 100 number. That's the FTSE 100. Is there still weakness? I'm just going to hop to the FTSE because I am doing this live in situ. It will be recorded. It is being recorded because the setup we have here, as you guys know, is a complete remote recording studio, not quite set up for live yet, so this is going to be recorded, but my team and I are going to try and get this out as quickly as possible as we migrate to a live service for the beginning of the week. So while I do that, let me jump into the UK 100 and just give you a bit of an understanding of what's happening there. So there is an interesting signal here. Look, we are calling a long. Interesting. So UK 100 is, here is the channel of the UK 100. Now, if you look back, let's just kind of go back in time a little bit, see what's happened. Look, you're seeing that the FTSE 100 has broken through. There's the 50 breaking through the 200. That's a real short signal. You can see then this channel is testing, going through here, and that's calling a longer signal. You can see the green button there is flashing. Don't really like that kind of move. It's a real contrarian play. However, if you were to stick to the simple rules of the breakfast breakout, we can place this trade. I think it's risky. And the reason I think it's risky is you are trying to go long on the FTSE 100, underneath the 50, underneath the 200. The clean breakfast breakout strategy, of course, does say whichever side, that's after that market shakeout, the market breaks through, that's where you should place your trade. I'm not happy with that. And the reason I'm not happy with that is you've got a decent separation of the lines, the 50 from the 200. It is a contrarian play. I look at the average trader on this channel. And my rules for serving you as best I possibly can on this channel is to put you in trades, or not to put you in any trades. I'm not advising you to do anything, but I am talking through commentary of what I do. And I like to tone it down for the audience that are new to this game, because getting you into the concept of doing contrarian trades, I think adds risk to the table. If you are a purist breakfast breakout trader, you would take this trade long. I feel underneath the 50 and the 200 with a cross not happening not so long back, you have got weakness to the downside. So I'm going to let this play out for a little bit. Remember that the breakfast breakout, you can trade any side. I'm favoring the short side on this. So whilst it's calling along, I want you to really understand my thinking, because that's what you guys tune into this channel for. And what this is really saying is, if we zoom in on this, and let's just zoom in on this a little bit, you can see, look, not only would the top of this channel indicate, look, there is a way to go. You've got to get through the 50, which is pushing up right against right now. That in of itself is high resistance. I'm not into taking risk on my half, and I know that some of you are just going to blindly copy what I do. I don't suggest you do that. I suggest you use this channel to help you form and transform into a professional self-directed trader who is first and foremost risk managed. And for my experience and opinion, trying to serve you and help you guys, I don't want you to walk yourself straight into trouble. So just because the breakfast breakout is saying go long, I say don't do that, or I'm certainly not going to do that, because it's hitting up against that 50 and then it's got to get through the 200. You're going to get a lot of resistance up there. I would further if the arrows were pointing down, and I'm going to watch this as this session here today plays out. So even though that's just technically calling those longs, I'm very, very cautious about that kind of move. So, hey, I may be proved to be wrong, and that won't be the first time, as you guys all know, but that's my analysis of how I look at the UK 100. I'm just going to jump back to the euro, and then I'm going to talk about sterling. But the keys here, and if I can just open up my 4-hour chart, loving that 4-hour window. Such a beautiful time frame of reference to look at any of your majors: euro, sterling, dollar yen, dollar Swissy, and of course my two favorites, the Aussie dollar and the Kiwi dollar. Love looking at those through those same time frames of reference. Going to go through each of those with you right here, right now, this morning, and get into that. Don't forget, these MACD lines are showing weakness on, of course, the euro dollar. We just did get a trade on. We're just paying spread at the moment. That's the loss that you can see at the top there. I'm going to try and minimize these, make these screens look a little bit more understandable. There we go. Look, we broke through the 50, testing up against that. It's consistent with what I just did. And that's really, really important. You're now seeing that separation of lines, the difference between the two MACD lines there, the convergence, divergence, showing that, of course, now we're getting some separation away. And that means that it could take some time for the euro dollar to come back and start pushing up again. So we are looking for short positions. Now, the COVID-19 situation improves in the US. Again, maybe this pair is not the best pick of the bunch on the short side. However, I did take that just now because of what's happened. We've had that lovely breakthrough on those pivot lines. If the situation worsens in the US and the demand for the dollar could continue, the euro dollar might still have some room to the downside. And that is my play this morning. Let's jump to sterling now and have a little look at sterling as we move across. So my sterling pairs are here. And watch as that now loads in. Now I'm looking at one of them in particular, but you'll notice if we just look into, I've got a 180 phase change that I'm looking at on here. I'm going to bring this, or I'm going to do one of two things here actually. First of all, I want you to notice the 180 phase changer has called a short, but that was a few bars ago. I'm just going to go to a nice, naked, simple screen. So let's get that sterling pair up here. And if you are using SmartCharts, in this kind of configuration, you'll notice that when you go to no strategy, you just need to pick the currency pair that you're interested in. And you can see, now if I want to add some other indications like the 50 and the 200, I can set them up as a chart template and just plonk them on the chart. So I literally hit that. And then those two charts, bang, auto-scaled, will have the break through the 50. It's finding a little bit of comfort on the 200. Expect that to change over time. Let's have a little look now, if we can, at the pivot screen on sterling. Important to note here, similar kind of thing again, testing up to that pivot line here. Kind of fancy that myself, again, on the short side. Why do I fancy that? Well, I'll tell you why. On the daily, let's bring up the daily of sterling. And of course, this is the fib levels that I applied last week. If you haven't seen where the 50 and the 200, again, I can just drop that onto this chart here, and with a plus, I can see quite simply where that is. And you'll see again on the daily, we've crashed through the 50. We're holding some support on that 50 line. It's low tested on there, but if it plunges through there, we expect, and I say plunges through there, what's going to cause that? Well, a number of factors. But first and foremost, I want you to see this move here, which is, again, testing up against this pivot line. So those of you who haven't traded pivots before, click here, and you'll see some of my training that I did only a month or so ago on how to trade pivots. It's one of my favorite trading strategies. I'm kind of liking the idea of when the currency's weak, underneath the pivots, this is that blue line, is that main pivot point line. These are, of course, red support lines underneath. These are green resistance lines above. When the currency is testing up to the main pivot line, when it's underneath the 200 moving average, we are seeing weakness in that market. Again, with the same idea as we had with the euro. Markets are resuming their sell-off. They've been triggered by fears of this new coronavirus wave that is freaking the world out a little bit. Remember, UK GDP plunged by 20%. It was 20.4% in April. It was worse than expected. It was very similar to the crashing news we had about the unemployment number in the US the week prior. So momentum on the 4-hour chart has turned to the downside. Cable has dropped below or testing below that 50-period simple moving average, slightly above on the 50-period exponential moving average. Again, RSI, that relative strength index, remains below the 70, outside overbought condition. And all in all, the bears are in control. So I like a test on this. And you'll see that when I place these trades, because of the size of this account, it's going to look like I'm losing loads of money. Don't think that. This is spread and it's got to be relative. So you mustn't let any red numbers that you see whilst you're placing trades freak you out. This happens all the time when traders get into the game and they think, Christ alive, what do I do here? Because suddenly I'm seeing red numbers printed on my chart. Remember, you've got to place spread. You're paying spread every time you place a trade. Every time you put a trade on, you are always in a losing trade. You've got to give the time in the market time to shake out and move. Now, resistance is at 125.75. If you kind of look, that's kind of not too dissimilar, about 40 pips north of where we are. That's decent resistance up there. So if you're going to place a stop on this trade, you'd want to be kind of consistent with that. That would mean placing a trade around this level here. If I just move that up, 125, that would be where your stop would be. This would be where your take profit is. And reward to risk, I would be happy with that. We can plonk that on. Nice early morning movements. We like to get stuff done between the sort of 6:30, 7 o'clock mark and about 10 o'clock in the morning in current market conditions. Then we know that volatility kind of dries up a little bit as we expect it to, and then push. Again, lunchtime sterling run, of course, where we've got those dual markets. That's the US market and the European market. And we've got 66% of the currency market in play. We know we've got two markets trading at the same time at about 12 o'clock, because at 12 o'clock here is 7 o'clock in the morning Eastern Standard Time. Now, if sterling does rally and gets above that, then okay, we are realizing, by the way, did I have that sell entry in? Let me just check. Yes, I did. And sterling moves into a profit straight off the bat. Let's watch that. Remember I said sterling had the probability of being weaker. You can see that playing out in the chart as we move on. Okay, so let's move on and look at further countries now. Basically on sterling, further above that 127.20, that's probably going to cap it as a recovery attempt. So anything else we should be looking at on sterling? Let me just notice for you. Jaws are relatively closed when it comes to trending trades. We're not looking at 180 phase changes, nothing like that. Remember this, that the pound has been battered by Brexit. You know, the UK economy crashed, as I said before, by 20% in April, worse than expected, and a horrible figure, really, in absolute terms. Manufacturing output collapsed by 24%, a considerable miss in comparison to around that 15% projected. So we are seeing some harrowing numbers out there in these major market economies. Pound has been battered, as I said, by Brexit. London will formally tell Brussels this week that it's unwilling to extend the transition period before year end. If those negotiations are not fruitful, Britain will fall back to the potentially unfavourable World Trade Organization terms in 2021. And we're expected to see a more volatile pound in this week ahead. We're expecting a crazy pound this week ahead. Look, let's just jump to dollar yen for a second. Just jump on my charts here. We've got the 4-hour chart on the hitting up against the 50 and the 200. Now, look, you've got some mixed signals with dollar yen here. We know that we've had some bounces last week in the equities market. We know that in terms of any of our indicators, our alligator, of course, says, as you can see, jaws are closed. We've got the 50 breaking through the 200, that's a weak signal, yet you've got price breaking up through the pivot. Therefore, you have a mix of signals across these charts today. Avoid is certainly what I'll be doing, because unless we've got clear signals and clear opportunities here, I'm not interested. Look, the general retreat of the dollar over the past 3 weeks has eliminated that risk premium margin amassed during the virus pandemic in March, even though the primary motivation for the that day-long retreat was profit taking on the 10-week rally. The speed and the extent of the climb was likely exacerbated by lingering fears. So from a fundamental point of view, the dollar yen is neutral for the moment. There is mixed signals from a technical from a technical perspective. The jaws are closed on the alligator, pushing up against the 50 and 200, which is the 50s breaking through the 200 on that 4 hour, and of course the 5-minute pivot on the left-handed window here has gone long essentially. So this is an avoid for me. Just checking the technical picture again on the daily, and notice that it's pushing up against the 50, which is already broken through the 200. So that's something that I'm going to avoid. Again, I'm just going to keep jumping backwards and forwards in this nice live session. Let's check what euro is doing. And I like to check all of these trades. Lovely underneath that 50 and 200. You're going to see this. We're in profit now. You'll watch it flick in and out of profit. That's purely spread. Don't get yourselves too excited. It's a larger account than many of you are trading with. If I jump to the sterling as well, we can see same thing again up against that 50. I'm fancying that we could have a problem. We could have a problem with it bouncing and finding some resistance off that 50, but I'm sure we've got enough movement on the downside for me to collect a profit based on my trade. Yes, we have. But notice that whilst we're underneath the 200, we could be getting a little bit of support off that 50 on the daily. I like the intraday run though still. On that pivot chart, there seems to be a possibility of a profit there for me, as well as there is on the euro. So they're the major two things. I did say that I would continue to keep looking at the keep looking at the FTSE 100. I think it's important to do that. Again, I'm just going to reiterate what I just said to you. You can see, look, it is marching its way. It did get through the 50. It's marching its way, but will it find resistance? Off that 200, it's very possible. It's not a trade I like the look of. I'll be really upfront and really clear with you guys. If I put the daily here, as we can see, here we are with the daily, well underneath the 200, underneath the 50, not a sexy trade whatsoever. So we are going to move off and leave that as it is. If it was to come back into the breakout range and then break the downside, there may well be something there in for me. Okay, let's jump onto my favorite commodity currencies, the Aussie and the Kiwi. Look, let's talk about Aussie first of all. Jump on the daily chart there. That was that high up at the 69 level. It's struggling to build on recovery to move beyond that. However, look, price on the Aussie, as we know, is through the 50 and, is through the 200 and the 50. Look at that 50 now, just trying to push up through the 200. When that happens, we like the Aussie on the long side. Look, we like it on the long side anyway. However, we have still got mixed signals. I want you to be aware of that because looking at our pivot chart here, we are underneath the daily pivot. There's not an intraday trade on the Aussie because we are underneath that pivot. Don't want to go short, particularly with the daily being above the 50 and the 200, particularly with that 50 being pulled up through the 200. There is a mixed signal there. We've got to be cautious. From an Aussie perspective, I'm expecting a retracement to the 50 and the 200. That means I'm looking for a pip runner, interestingly enough, to trigger because I have got those jaws opening on my hourly chart on the Aussie. I am underneath the pivot line. I feel there could be a pullback, a significant pullback to this 50 and 200. And so if we given I've got some nice agreement between the pivot point here and potentially something which might move on my pip runner. I'm expecting a pip runner short, noticing the phase 1, the phase 2, I beg your pardon, let's just get this right. This would be phase 1, this is phase 2, this is phase 1, this is phase 2, this line here. I'm expecting a blue arrow to appear shortly at some point, giving me a pip runner south. If so, I could take that trade or I could do just a manual trade of my own, given I'm seeing a nice interpolation with this moving average line here. Okay, so let's just jump back and do a final recount before I let you guys go this morning. I hope you're enjoying this kind of format. We've been getting some great feedback, should I say, from you out there on this style. And we intend to do this in live. We're just preparing our systems here this side to go live. We will be broadcasting this live in SmartCharts so people can watch me as I place these trades, but obviously none of you can see me live right now. This is going to be recorded. We're trying to get it up the same sort of day, so you can get an understanding of really how I'm placing these trades. I'm going to just keep checking in with those with those euro and sterling trades. You'll see they are all sitting underneath the pivot line, which makes me happy. Same with sterling. And we're just waiting for those moves to happen. Just to check on that daily pivot line, you'll see that now here's the interesting test, just to finish off. So we are seeing a rally on sterling this morning, but we'll see if we'll see how things do work out. We're really testing up against that 200 line on the 5-minute chart. It is significant. Let's have a look on the daily though. However, we are right underneath the 50 and the 200. I don't like that as a long trade necessarily, so I'm going to keep away from that. And up until that point, that is how the game is setting itself up. There's a lot of volatility out there. You can see now what we're looking at on Euro, Sterling, Aussie, dollar, yen, kind of skipping past because you've got mixed signals. It is a bit of a mixed market. In mixed markets, if you are going to take trades on which are having conflicting pictures across different time horizons, my suggestion would be for you to reduce the risk right back. If you enjoyed this video, please don't forget to hit like. If you haven't subscribed to this channel already, get yourself on the subscription list. And listen, look, this piece of software I'm using is going to be upgraded further by including live trading sessions. Many people have called for it who are SmartCharts users. We're looking at how we can plumb that into the platform so you can have access to what I'm doing when I'm doing it. And I want you to be able to take advantage of that. So if you would like a 7-day free trial of SmartCharts, you'll see in the description of this video a link where you can click and get yourself a 7-day free trial where you can access all of these tools. And remember this, the training that I give on this channel, and I appreciate all the very kind comments everybody had. A really lovely man called Paul. Thank you, Paul, so much for the email you took the time to send me yesterday. I received it this morning. He's been a currency trader for a long time and gave me some amazing feedback on this platform. I thank you so much for that. And for all of you out there that are giving me this feedback, it's encouraging. I don't have to sit here and do this. I do this because it's my passion and I love to teach people. And whilst we've all been in lockdown and I'm not running around the planet doing this for live, I get to do this from my studio here and I'm with my kids. So I really appreciate the feedback, the encouragement, and the comments and questions that you guys have. If there's things I haven't covered or you want in more depth, please feel free to leave me a comment in the comment field underneath this video. Grab yourself a free copy of SmartCharts, the training in it. I promise you, my team are with me here in the studio today, have worked tirelessly on producing what I think is the best trader education platform online built into a transformational trading app. And if it's something that you really want to take seriously, I really suggest that you do the foundational layers built in SmartCharts, which of course is the training. So grab that free trial with my blessing. Any comments, questions, please leave them in the field. Until then, I look forward to seeing you guys in the trading den. Hi guys, welcome back to the Trading Den. Today is Monday the 22nd of June. My name is Greg Secker. You are in the Trading Den. We're going to jump straight into the action of the markets this morning. Let's jump, as you can see, onto the UK 100. Love a breakfast breakout. Now we've got a lovely bounce. If you look on that daily chart, look at the right-hand side of the screen here. Nice bounce off the daily, dragging up that 50 towards the 200. We don't normally go long on any position under the 200 period moving average. But when we're looking at those short breakfast breakouts, which we are on this chart here, top left, notice the blue arrow. Here's our entry, here's our stop, and here's our take profit. That's a trade we want to be taking. And the reason we want to be taking that is we've got a seriously strong push on the UK 100 following what has been, let's just be honest about it, a tumultuous ride over the last little while. So we like to start our morning off by getting a breakfast breakout on. Now remember the breakfast breakout range, I'm just going to put the trade on because we are close to entry. So we're looking for 25 grand on this. We've got an entry just above the break here. I'm going to get that on as I talk to you so we know that position is in. If I go to check my trades and I go to my pendings, you should see that sat there right now. So that's in and ready to go. If I go back to my charts, you'll see we're literally just about to jump into this position. So another couple of ticks up and we're in. Now, the reason we like these breakfast breakout trades is, look, they're a fantastic way to start the week. This is going to be a beautifully hot week. It's going to be hotter here in the UK than it is in the Bahamas. We're expecting 34 degrees by Thursday, but that doesn't mean that the markets are necessarily going to heat up just because the weather is. However, this morning we have got nice push rallies happening on the FTSE 100. We've seen that build up. Kids have gone back to school today. businesses are getting back into operation. Things are starting to finally loosen and start moving around again. And so we love a breakfast breakout, beginning of the week, Monday, Tuesday, Wednesday. They're your top days for breakfast breakouts. If you didn't know, don't really care about them on a Friday. You can take them. I didn't take one last week. You may have noticed one of my live trading sessions because it didn't really meet my criteria. And I've always said, if you want to place a breakfast breakout, you just kind of do it in isolation. I kind of break my rules a little bit there. Well, not really break my rules, but I just kind of try and give you a little bit more insight in these trading sessions from the trading den, so you can understand what my brain is thinking. And if I've got a lot of resistance that I'm pushing up against, I would rather not take a trade than take one on for the sake of taking one on. So you can see we've just been triggered in there. And you know that because on the P&L, that's the spread. This is a large account. I'm trying to hunt down 25 grand this morning. I'd like to have a good start to the week. So that is going to be just the spread that you see there. Remember, don't be somebody who just stares at the numbers. If it's red, you feel bad. If it's green, you feel good. You got to understand that in all of trading, when you're trading large accounts of over $1 million, you're going to have spread that's going to be a few $1,000s. That's kind of obvious and quite normal. But I like that little push starting out. Just starting for the morning roundups. This is how we start. A little bit later starting this morning. It's because I had to do the kid run to school this morning. We are all still in lockdown, but things are moving. Businesses are moving. If we look at that UK 100, now notice here, many of you know that I am a pivot point trader. It's something I love doing, pivot point trading. It's very powerful because it's session based. With currency trading, I like to be in and I like to be out within a day or within a few hours within that day. And I like precision and really nice clear signals. Remember this, SmartCharts, the actual platform, is 2 hours ahead of British time if you're in the UK. It's based on Central European time. So you'll notice that this pivot point line here, which, by the way, these are Fibonacci corrected pivot points. So these are Fibonacci pivot points. That's really important for you to remember. Fibonacci pivot points use those Fibonacci series of numbers that we've discussed in, of course, other videos here on the channel. In fact, if you look or click here, you'll get access to that Fibonacci training I did. I don't know any pivot point traders in the currency games that are professional traders that aren't using the Fibonacci pivot points because they are just better. They are built into SmartCharts for that very reason. So if you go to your indicator list here, type in pivots or Fibonacci pivots. If I type in pivots, you'll see Fibonacci pivots comes up. They're already active on the chart. If I click here, active on the chart, you'll see what I'm looking at. And I've got historical volatility, I've got MACD, and I've got Fibonacci pivots. And you can change any of those settings in there. I don't recommend changing any of those settings. Leave them on. The time frame is the daily settings applied on a 5-minute chart. We like to see a 5-minute bar chart. So we have some strength on the FTSE 100 breaking through that pivot line, which would have been 8.15 this morning as the market obviously started moving this morning. We've got the signal, which we've pulled here on that breakfast breakout. So that's the first trade in the game as we start moving this morning. We're getting strong positive signals all across the map for UK 100. So look, there's no guarantees in trading. You guys know that by now. But I like the concept of this trade between, remember this is a daily chart, so that we're only looking at, if you see this on this breakfast breakout here, what SmartCharts intelligently does is it shows you on any UK 100 chart or FTSE 100 chart that I'm trading, it shows you those trade flags on any other time frame. So you can kind of see things in context, and that's really helpful. So that means that 5-minute chart here, you say, well, okay, am I going to run into any resistance here? You don't need to start changing this around too much. Just look here. This is your daily. You've got a nice gap between the 50 and the 100. You've got a nice low test push off that 50 running up. You're clear of this resistance line here. You can see where your stop is, which is down here relative to here. You can see where your entry is here relative to here. And you can see where your take profit is, which is here in free space, which is relative to here. And that's a nice, now you can see this wants to get going. I'm nearly got rid of my spread. It'll wobble up and down, but I'm happy to let that one run. Then I want to do my major test. So if you remember from any of these other previous trading sessions, I like to go through my majors, see what's happening. Let's have a quick look at the Aussie. And look, sometimes when you leave your charts, you just need to kind of refresh them a little bit, auto scale them. One of the things I love in SmartCharts is just to get you to where you need to be in terms of recognizing where the opportunities are on the platform. You just hit auto scale and it just kind of brings the chart in. Now look, you've got a nice, strong, bullish signal being seen on the Australian dollar right now. Why am I saying that? The 50 right now is being pulled through, up through the 200. Very, very strong bullish signal for the Aussie. Now, look at the alligator. What's the alligator saying? Oh, jaws are opening again. Okay, good. Let's not look at pip runner necessarily, but let's have a look at other strategies. I'm going to make this window big. I'm going to bring my scanner along so I can see what is being flicked up for what currency pairs. Now, on the pip runner, we've got nothing I'm interested in there when I'm just focusing. Now, 180 phase change, that's a trend-based strategy. So straight away, here we go. 4-hour chart, and it's pulling, and it's saying a short, right? The only reason it's doing that is because of some of this price configuration that's happening in this 4-hour window. Not interested in that because it's conflicting against my design idea. And my design idea here is the 50 being brought through the 200. Let me show you that again. So if I show you the daily chart, bring it up nice and big. Now, all you're seeing on that 4-hour chart is that little pullback retracement here, but price is pulling up again. So that's my bigger picture view. And that's how you want to delineate from seeing what could otherwise be, that's a false signal for me on the 180 phase change there. So I'm not going to pull that because I can see my alligator is being opened here. I can see, look, I've had my early morning run, as you can see, on the Aussie, trading from the European session. But you can see it's up here on the pivot points at the, what we call R1. That's the R1 level. This would be R2. And up right at the top here is R3. So we can see we've got a little bit of a bouncing range here. I don't want it to place a 180 phase. I'm not looking for a short position. See if there's anything else which is being called. And I'm going to jump to, let's see if we've got any T waves being called on the Aussie. No T waves on the Aussie right now. There is Aussie Kiwi. And nothing there, okay. So I'm not interested in the short trade here, remember, because I've got that overall bigger picture. I've got the jaws opening up here. Look, there is a little bit of a retracement here. Here's a trade that I'm going to like the look of. And this is something a little bit, not one of the strategies. This is just Greg Secker trading with you live right now, or live as it is right now. We're going to get it recorded and put on the channel as quickly as we can. Let me show you this. I'm going to wait for this to pull back to here. So I'm going to put a buy stop in here. Which is when it, like it has before, I expect a buy. I want this pullback to here, so I'm going to take a buy stop here. I'm going to take a sell here, and I'm going to put my stop underneath. Let me show you. Yeah, underneath here. So nice and tight this one. Watch this. So, and this is how easy I can do it. I can drop my stop to just below this level here. I'm going to put my buy entry here. And I'm going to put my, sorry, let's just move that to the right spot. Buy entry here, and take profit will be here just before. So you can see what I'm doing here. I'm waiting for this to pull back, bounce, and then continue rallying. Does that make sense to you guys out there? Just because there's no, the 180 phase change of the trend wave isn't showing me an Aussie dollar. They're based on specific rules. I've been a currency trader for 25 years of my life now, and I'm a pivot trader, and I know how pivots work well. Pivots are powerful. Don't forget that. You've got a nice break from that 50 going through the 200. That's going to give us a nice little volume rush. I hope this falls down and gets me into this buy entry here. If it doesn't, just continues rallying, I don't get the position on. That's what it is. Now, what's my expiry on this? Let me tell you. My expiry is, this is not open-ended. This is just for today's session. So I want to make sure I'm here till the end of the day. If this little move that I'm playing here doesn't happen by the end of the day, it gets taken off the board, and there's no orders hanging around. You never want orders hanging around when you're trading in sessions. And this is, we are in a session right now, and this pivot point trading is nice because you're clean and flat by the end of the day. Clean and flat means you don't have any open positions trading. So I'm in this, I've got the idea. What I love about, and you know I love SmartCharts, this tool, you can see hopefully this might work out, allows me very quickly to get an idea on, drag lines around, check in with my risk percentage, which means that my position is trade sized for me. I don't have to do any calculation. I've got the position on and I say, that's it, go. And then that's it. So I can always go to my trades button here, check my trade. So I've got my breakfast breakout. I'll just jump back to that so you can see it. If I go to daily here, And this is my breakfast breakout. So you can see we enter here on the blue dot. We're just waiting for this to get going. We hope this will get going. It's kind of in that range of the morning now. So if you look at the chart here, it says 12:45. It's not. Remember, it's 2 hours minus 2 hours time. It's about 10:30. Bit of the dead zone for the FTSE 100 between 10 and sort of midday. So you normally get a nice push for those of you trading alongside me from the trading den here. You get a nice push from sort of 8 o'clock in the morning when markets are open, to about the 10 o'clock mark. They can flatten a little bit, and then they get another little push as the US market opens up, as US investors come in and take positions long and short based on the current trading morning activity that's happened here. They say the Americans tend to copy what's happened in the UK session. So we let that one run. We've got the Aussie position on if that Aussie pulls back and then has a bounce off that pivot line. That Fibonacci pivot point line is a strong level, just so you're aware of that. It's likely it will bounce off there and get going again. And if it revisits, see, the thing with trading you've got to remember is everyone's trying to catch the big breakout, and that's what I want you to be aware of. So people see a range, they think, oh, I'll buy it, and then it'll break out. It's like, there's an easier way of trading in that, which is trade the market in the activity range within which it's already in. So for example, you're seeing the Aussie here. It's broken through the pivot, bullish signal. You've got the 50 going through the 200, bullish signal. I've got a false signal on the 180 phase change. I've got to ignore that. I've got my alligator opening up, as you can see here, those lines opening up, the lip, the jaw, and the mouth opening. I've now got my if you look here on the 5-minute Fibonacci pivot corrected pivot points, it's hit. This is the range within which it's playing, and you can see it's getting a bit softer here, but it's being dragged through. So we know that push is coming. I'm trying to be quite cheeky and say, well, look, you're probably going to retest this pivot point line. And when I say retest that pivot point line, it's the most important line on the trading session, that light blue line. In other words, the probability of it bouncing off that and going just back to the range it was in is there. Why not grab the pivot points? Why not grab those points? There's £8,000 worth, or $78,000 worth of my dollar account of profit there sitting there for me. So why would I not want to capitalize on that? Rather than trying to grab a currency that's going into territory that hasn't been to for a while, that's kind of crazy, right? You're increasing the intrinsic risk in the trade. I say if there's a range within it and there's a 50 being pulled through a 200, you've already broken the pivot and you're in positive buying territory, but it might bounce off that, which looks like it will do because you can see the range it's in. Grab it and then see if you can get the little bounce back to the 100, to that main resistance line. So that's the Aussie. Let's flick into the Euro, most traded currency pair at the moment right now. Again, wherever your screens were left from where you last used them, things move on. You just hit the auto scale and it puts everything nicely arranged in the chart for you. So it's nice and easy for you to read. I like nice, I like easy. And again, let's have a little look on the Euro and just see my understanding of where we are now. Here where we are with the Euro, a little bit of a different picture to the Aussie. 50 is already above the 200, certainly on the 4-hour chart, but on the daily, we've got our Fibonacci retracement line here, and you saw that it broke through the 76, which is nearly went all the way to the 100, starting to retrace a little bit. Most importantly to recognize, we've gone through the main pivot point line. In terms of where we are going, well, let's just have a look here. We've been up to there. We're now pulling back. We can do the same kind of bounce strategy that we just did on the Aussie. But let's look for signals here. What's really going on the 4-hour, right up against that 50? Not the greatest of signals. On the 1 hour, on the daily, with the 50's just broken through the 200, and with the alligator, we've got the mouth opening up. So again, right now, we're looking, if this comes back and bounces off that main pivot point line, this is real pivot trading, folks. I'm going to look for the strategies on the Euro as well to see if there's anything else that matches better based on these conditions. What am I looking for? I'm looking for long positions, aren't I? Because I've got the 50 through the 200, so I want something that matches that picture, tells me what's really happening. And so I scan my eyeballs quickly through here. I've got euro dollar on the 180 phase change. It's probably going to give me a short signal like it did on the Aussie, and it is because it's looking at that 4-hour chart. And the 4-hour chart picture says, well, if you want to grab that little run down before it gets there and buy it up, why don't you grab it? You can do that. And it probably will retrace down. So I could actually do a double trade. Now, this is a little bit of a risk, but I'm going to do it for the sake of educating you on how this works. And this isn't something I'm going to encourage you to do, but I want you to understand my thinking behind this. And here's the thinking. You've got a phase 1 and a phase 2 cycle. On the 4-hour chart, the phase 2 cycle of a long position, of course, is short. It's a contrarian trade. So what this is saying, if I hit short here, watch. This would be taking a sell entry at 111.86 all the way down here to 111.14. So you've got a nice little run of about 40 pips down, okay? Little 10 grand trade, because if you can see, look, you've got, just on the 4-hour chart we're looking at right now, this is phase 1, phase 2, phase 1, phase 2, phase 1, phase 2, phase 1, phase 2, phase 1, right? So in other words, we're saying we'll take the short down towards the towards this 200 period moving average on underneath the 50, and then when it bounces back up, we'll take it long on the 5-minute chart on the pivots. So I'm going to take the little run down. Now, if this does run, I've grabbed myself a profit. Great. Now, if it bounces off, because remember, I'm looking for that big run, but it's retracing, so I'm placing a contrarian trade against. Now, look, I don't normally show you contrarian trades on here because I try and keep it very simple for you, but it seems to me that there are signals being called on the 4-hour, which is consistent with what's happening here. You've got to bounce off the R1 line here, running back towards the pivot here. I'm saying let's grab that on the 180 phase changer here, that short position, which means I'm just grabbing a bit of profit here to then, if I start to then bounce off that pivot point line long, then I get my long on. So I'm being a bit naughty. I'm taking a contrarian trade down because I've got a nice clean signal. I can see why it is in free fall, but we know the overall picture on the euro this week and the Aussie is going to be long. So we're going to then take that long, but I'm just kind of sneaking a little profit before I get there because, hey, if it doesn't get there, okay, it doesn't get there. I'm kind of safe here because if this fall continues, great, I get the little profit down, then I get the bounce. If it carries on rallying, nothing happens, I don't enter the trade. So I've got myself nicely covered on both. I'm then going to switch now to the sterling, expecting things to move around on sterling today. Now remember, if you haven't auto-scaled your charts, just hit auto-scale, and that just puts everything in context. Now, first of all, daily chart, what are we doing here? Well, the 50 is well underneath the 200, it's not being dragged up. We are kind of in shortfall territory on sterling, so different picture. Sterling this morning did break through again the main pivot point line like it did on the euro, like it did on the Aussie. I'm looking for short positions on sterling. There's not a lot jumping out to me other than the fact that price is underneath the 200 and it's underneath the 50. A retest against this 50 could fall further. Let's look for any strategies on sterling, opening up one of those windows, pulling the scanner out, and then going down the list. So we have 180 phase changes. Sterling here, we should have a short position on, and a good short position trade here. This is 180 phase changes, so we are up against the major moving averages. We've got a test on the 20, that's the blue line. We've got an entry, which is on the blue dot here. If I put the lines on, you can see 25 lot trade. We would be entering at 123.80. So that's this line here. Actually, it's one. So let me get my numbers right for you. My sell entry is at 123.63. That is right. My take profit is at 122.09, which is a nice 72 pip run. I can adjust this to be a little more aggressive. I am going to adjust this to be a little more aggressive. So, and let me tell you why I'm going to do that. I'm going to move my stop loss above the 200, which you would say, well, you're being less aggressive there. Well, quite. But I want the protection of the 200. I'm actually crafting this so I get the phase 1. If you haven't seen my training on phase 1 and phase 2, look on the channel, you'll see it, it's all on there. But I want to be a bit more aggressive to get the beginning of that phase 1. So that phase 1 move south. So I'm going to position my entry a little bit more aggressive up here, which means that my target, I'm looking for a little 100 pip run short on sterling if this happens. I'm going to leave that here. So that line here is consistent with 124. Yep. Let me just check that. So here, so if you look, notice my main pivot point line here, watch this. If I can just open this, I want to take the short position, but I don't want to be going short with this price above the pivot point, right? So I'm going to adjust this picture to be consistent with this picture because already this picture is giving me a nice move. So what am I saying? I'm saying my entry wants to be a break through that pivot line, right? So they don't conflict with each other. So I want 2381. Let's take 2378. That means I'm through the pivot. That's a nice trade now because I've got my stop loss above the 200, nicely protected. I've got a good 87 pip run here. I make $21,000 if this works out. It's perfect phase 1, phase 2, dropping into phase 1. Again, if we break through this level here, I'm liking the trade a lot. It also means that it's broken through the main pivot point line on that 5-minute chart, which is that daily trading session. I've put my stop in a more advantageous position above that 200, and that is now on, and I like the look of that. Quick check to my other charts. So I just want to go back to my daily on my FTSE 100. Yeah, getting there, just a bit quiet, but we're just waiting. My euro position, has that triggered at all? No, it hasn't, not yet, but if it does, I think I'm going to nip a profit there quite easily. It's just pending right now. And my last one is my short position on sterling, and that's because if sterling, just quickly jump on that, breaks below, and it's tumbling as we can see, if it breaks below this pivot line here, I've now got a decent swing move with it breaking the bottom here. My alligator is kind of just, it's getting going. It's not perfect with the alligator, to be absolutely honest with you. But all my other signals are pretty strong. So if I do break this alligator will open up. It's opening, but I'm seeing this weakness coming into sterling right now. It's lining myself up for quite a sexy morning. This could be a good day or it could be a very average day. But this is a nice start to the morning. We've got FTSE. We've got the nice breakout we saw there this morning. Just waiting for that to get going. Within the next 2 hours, I'll come back and check in on that. You can see my sterling run here as we get clear of that pivot. Notice what I've taught you here this morning is if I'm clear of the pivot here, remember that pivot's got it's a very powerful line, that blue line. If it's above there, it's a buyer's market. So I'm short below the pivot here, which is consistent with that 180 phase change on that 4-hour chart, taking a nice run all the way down to here. That's an 87, that's a 25 grand trade. And I've got my Aussie, as you remember, I placed before. Jumping into that. The Aussie position is, we're waiting for that to drop. And if it then bounces with that lovely strong signal here, remember that 50 is moving through the 200, I'm looking to take a long position there. Now listen, that's me set up for the morning. Hopefully it's going to be a great start to the week. Whatever happens this week, I'm going to get a suntan because we've got 34 degrees coming on Thursday. So if you're in the UK, get your suntan cream out and get ready for that. Get your trading done early in the European morning session. That is where the action is. But markets are looking good at the moment. This is a really good volatile time. Now listen, if you did like this video, don't forget to hit like. If you're not subscribed to the channel already, get yourself on the subscription list. We are going to be producing more of this type of content as the weeks and months go by. If you have any questions or comments about the platform I use, which is SmartCharts, it certainly is my weapon of choice. There's a link in the description which can give you access to a special offer for YouTube subscribers on there. I would grab that. The education in SmartCharts is second to none. I mean, it really is a foundational platform to build you up. And therefore, until then, I look forward to seeing you guys later on here in the Trading Den. Well, morning everyone. Here's just a quick recap on last week for the British pound. After a hard week, it did its best and attempted to recover, but concerns about the US coronavirus, as we know, kept it down. So is a recovery on the card? Well, maybe, maybe not. Optimism about Brexit and upbeat UK figures provided some support, but US coronavirus cases triggered a rush to the safe haven pound once again. Now this week is going to be interesting to say the least, as the second quarter draws, as we know, to an end, and the US non-farm payroll numbers and additional COVID-19 stats, as well as the official Euro-UK negotiations, could prove to be key indicators on how this pair enters July. But let's not forget, sterling is such a risk-sensitive currency. The Chinese manufacturing, that's the PMI data, could have a big impact too. So really, is the UK ready to return to growth? The market's preliminary purchasing managers index, that's that PMI number for June. It did beat expectations, with the manufacturing sector even topping 50 points, and that could indicate a return to growth. So we're kind of got to watch this space. However, we are technical traders in the trading den, and finally, from a technical trading perspective, and that's really what I want you to focus your attention. There is lots of noise this week, as we're aware. Below 123, which we're sitting at 123.61 right now. Anything below that, we could then see a nice drop all the way down to that 120 level. So let's just take a quick look at that as I jump into sterling and jumping onto the chart. So this is my charts, as you know, I have it laid out. I've got sterling on the daily on the left-hand side here. I've got the pivot on the left-hand side. I've got the 180 phase changer calling signal trades, which have just hit profit. And I've got the jaws opening up on the alligator. So where are my opportunities for you right now? Well, let's just have a quick look and tell you. First and foremost, just remember the 200 is below, sorry, the 50 period moving average, the exponential moving average on the daily is below that 200. That signifies weakness. You've got a nice pull on the 4-hour chart on the 180 phase changes. As they're underneath those key lines, we're then getting nice signals across that 20. So profit this morning on the 180 phase changes. If you're somebody that doesn't have access to SmartCharts, you're mad. But if you're somebody that just likes to do it manually, I can show you a manual trade right now, which I quite like the look of. And it's one which is consistent with where this week's going. It's Monday, don't forget. So we're going to have noise towards the end of the week, and we don't like to trade the markets when there is lots of noise in the market. So this Monday, Tuesday run that I'm going to show you right now is something that could be useful for you. Again, look, there's lots of automated trades. There's lots of manual trades I like placing as well. Particularly, I'm kind of interested in this. We're getting some high tests on this daily bar right now. I'm going to hit the sell button. And as I do that, it's going to give me my 3 lines that I need to play with. Those 3 lines, of course, are the stop loss, the entry price, of course, the take profit. So where would you place your stop here? Well, of course, I want to get my stop above this 50 period moving average. I don't need to be that high, but certainly around that level is where I want to be. This is the trade I want to just tick over for the rest of the week. And I put my take profit all the way down here, which should give me a kind of a 1-to-1, looking for about 34,000 pounds of profit on a risk of, I'm a little bit north of that red 50 period moving average, but I want to have some protection in there. So we've got a nice 1-to-1 on that. I'm happy with that type of trade. And I'll tell you why. That weakness that I talked about, and of course, we know what's happening in the UK right now. We are seeing some of these little COVID breakouts happening all across the US. We're seeing it happening in Leicester. They may close Leicester down. I think they are closing Leicester down as we speak. And we're seeing that signifying right across the chart. So if I jump into my 5-minute chart, even though we don't really trade a 5-minute chart, we do trade it when we're doing pivots, obviously, but we take our bigger signals from those higher time frames. Jumping into that, let me just bring this down. You can see, look, nice steady fall this morning. This was triggered at about 8:30, 8:45 this morning. A good solid breakthrough here this morning. I'm going to show you where we placed trades this morning. Sorry, folks, I'm a little bit late today. We're just doing some modifications to the studio, and that means recording's a couple of hours later than it was normally last week. But let me just give you an understanding of the levels here that we're looking at. So I'm just going to take a horizontal line. This would be my level here, which was this 123.51 level. So if I take, and our target here was, we've broken through the main pivot line this morning. Target, of course, was the S1 level. Successfully hit the S1 level, sitting on the S1 level right now. Just going to kind of show you with that free fall what you've got. If I go to my measurement window, so here, measure and time and price range. More importantly, really price. And we'll just see how many pips. We've got a little 30 pip movement this morning. Why did we take this? Well, there was a range here underneath the main pivot point line this morning. Pivot point traders are smart enough to know that a break through the main pivot is critically important, but we want to make sure that we're taking into account other areas of support and resistance. And that's, of course, why I brought that to your attention here. So that was the move, the first move this morning on sterling. Further moves on sterling, of course, this trade that I was showing you here, and if I don't okay that, it will come off the chart, and that's a safety feature to make sure that I don't place trades or leave trades open without them. So I just leave the sell button again. We'll do those, show you how I lined that up. So we take the stop loss here. We want to be above the 50. We want to take the take profit right here, which It's a daisy. One sec, let's try that again. Is at this level here, it's about 40. Let's just make sure I am not doing anything silly as I go back. Yeah, fine. So this is an area. I've got a about 200 pip run over the week. So kind of steadily moving it through. I'm going to okay that so it now goes, and we are at market, just so we're clear. I like to do something live so you can see me placing things and getting things on. You're going to have the spread at the top there. Don't let that concern you too much. The trades I have on right now is that one. In terms of pending, there shouldn't be anything pending from last week. Always just check that you haven't got things in there pending that suddenly could get triggered and put you into a trade. That's certainly not what we want to be doing. And just notice as well that we've got some synchrony with the other strategies, which we know, for example, the 180 phase changer. Those have all hit profit this morning. And we have the mouth of that alligator opening up. So we are taking a short positions on sterling this week. We are under the 50 and under the 200. Very important on the daily. We're under the 50 and under the 200 and under 20 as we are on the 180 phase changer. So you can see already we're jumping straight into profit on that sterling move purely because all of the signals are very supportive of that. It will move around, don't worry about that. But just in the short space of time I'm with you, you can see that that has some momentum in it. Why has it got some momentum in it? Well, it's under the main pivot point line there. It's under the 50 and it's under the 200. It's under those major moving averages on the 4-hour chart on the 180 phase changer. And of course, the jaws are opening up. So we'll monitor this one and see how well that goes. And now I want to move over to our Australian friends. So just looking at this Aussie, the pair looks like it's entering a bearish corrective decline on a break below the 67.70 level. And given that these days the US dollar's advance are a result of demand for safety than strength in the dollar itself, the Aussie dollar pair continues to have this very much a limited downside bearish slope, if that makes sense. It's the 50s crossed above the 200 in the last few days, or last few days of last week. The pair itself still needs to clear that psychological big 7, that 0.7, that big 70 level, the big figure, to really turn bullish, with room then to advance towards those lovely fresh yearly highs in the 71 price zone. The first relevant support is around that 67.70 level. You get below that, and then we're going to start looking bearish again. And the break below it would then, you'd favour the 66.80, the 66.90 price zone. Where are you sitting right now? Is you're at 68, 67. So you're well above that. But if we do break through, it's going to be consistent with crashing through that 50 and the 200, which again will give us some downside risk. How to trade it? Well, look, it's not as easy as the sterling, as you can see that I just popped on. You are above the 50. You are above the main pivot point line on the 5-minute chart. So that would suggest going long. We're not going long right now because we've got mixed signals. We've got a closed mouth on the alligator. We've got short trades being called on the Aussie on the 180 phase changer. And we haven't got a clear signal trade. We're kind of flatlining on the Aussie, so we're looking for it to pull back a little bit, leaving it with a barge pole, if that makes any sense, because we don't have clear signals as technical traders here today. We don't need to be trading everything all of the time, remembering that. We want clear signals in our markets, and if we haven't got that, we leave things much more to chance. So let's now move on to Japan. We love trading the dollar yen, and from a technical point of view, it's super responsive. We've got a little bit of resurgence this morning, a little bit more power coming back into those buyers, or the buying pressure, should I say. We're now pushing up against the 50 versus the 200 on the daily chart, which means I'm expecting some resistance there. If you were to trade this, which you'd be mad to, on a 5-minute chart on the pivots, you could have nipped a run between the main pivot line and the R1 line. You'd be mad as a hatter to have done that. I don't recommend that. We're looking for short positions on dollar yen. Very much like we just did with sterling, which you can see is working out well. Look, we're up against the 200 on the 4-hour. We're up against the 50 on the daily chart, and of course we are hitting resistance right across the hourly chart as we speak right now. You can look at a very, very clear signal there. I'm expecting a pullback, a short position, and a trigger on a short position. We haven't got a signal yet, but we could certainly take a position, which would be trading this back. Whilst it's having a run, we want to see it pull back and break below either that R1 level if we wanted to trade back to that major pivot point line. Right now, there is not a trade available for that pair. And finally, ladies and gents, let's take a look at the good old Kiwi. In all fairness, the Kiwi has been best performing at all the G10 currencies so far this month. It's strengthened by 2.4% against the dollar and about 1.1% against the Aussie. It helped to lift the Kiwi to a recent high of 0.6584 on the 10th of June, which was close to last year's average of 65.91. And let's also note that the initial COVID-19 related sell-off from March, when the pair hit a low of 54.70, that's pretty much already been reversed. So we're looking for better times on the Kiwi. Now, having said that, this morning on the Kiwi, we've had a nice little rally run, which is now pulled right back to that main pivot point line. If you look at my pivot point chart for the Kiwi, really playing very key numbers here. If you look at how this has been ranging, if we look at the daily chart above, we can certainly see the 50s getting close to crossing over the 200. We are getting trade calls on, and that would be breaking this range here on the 180. Actually, we're on a pip runner looking there. That's not what we want to be looking at. More of a 180 phase change. That was something else from a different session. But Kiwi, we are getting a short signal being called purely because of that test against the major pivot point line. So there's a really nothing to do on the Kiwi. Late last week, the Kiwi did lose ground against a stronger US dollar. As the market sentiment deteriorated and the risk-sensitive Kiwi lost ground on the back of a global increase of coronavirus infections, that turned the Kiwi negative on daily charts on Friday, barely resumed. This week, we're kind of sitting in this range. We're oscillating in a range until we get a real clear breakout up or down. Very little to do there. Remember that trading in a range is one of the most difficult things to do. So my play this morning, as I've just done, and that trade is triggered in, of course, is my sterling trade, and that's my safe trade of the week starting out. Now listen, if you like this video, don't forget to hit like. If you haven't subscribed to the channel already, get yourself on there. We've just made £3,000 in the space of recording this video, and we expect to make a lot more. Let's hope that continues. Now again, there are tools here in SmartCharts which will really help move that stop loss down and capture profits. For those of you that don't know how to do that, all of the training is available in SmartCharts. I highly recommend you get yourself on there. It is my platform of choice, and I highly recommend you use it. Any comments, questions, suggestions, anything you want to see, please put them in the comments below. Again, it's been my absolute privilege answering all the great questions that you guys had. You're a fabulous audience. It really brightens up the beginning of my week being able to do this in front of you. So please just keep those comments and questions coming, and I look forward to seeing you next week here.
Hey, yo, check this out. We're breaking all the rules. Anything we choose. Verify, live and prove. I got something new. I got that brand new. Something brand new.
In the trading den. Well, good morning, guys. Welcome back to the Trading 10. I'm your host, Greg Seckham. Today is Monday, the 6th of July. We are just going to get down and dirty and get straight into a market session. I had lots of great comments over the weekend. Thank you all very much for that. We wake up to the news that Australia has locked its borders to certainly no one can fly into New South Wales. My traders on my trading floor out there are being restricted, and that's because they have a big second wave of coronavirus breaking out as we speak. We're worried, of course, about what's happening, of course, in the States and in the UK. We opened up all the pubs over the weekend, and of course, actually, despite the fact of a few news announcements about Soho in central London and some other areas, it wasn't too bad. However, Australia, we're going to look at the Aussie dollar this morning because we're going to expect a reaction economically on that against other currencies. And I'm going to start you with my morning routine. So I want you to be aware that we are entering trending market conditions. That means those alligator jaws are opening. It means I'm going to be looking at the 180 phase change this morning. It is about 10 o'clock in the morning. So I'm just going to get straight on in. I'm going to start with our favorite, as we know, which is the UK 100. We're going to look at that breakfast breakout. There is a signal being called on the breakfast breakout right now. I'm going to jump straight into SmartCharts. I'd like you to join me. And this is the screen I like to look at. So it's that daily pivot screen. We know that the breakfast breakout, which is in the top left-hand corner, like it positioned there, always keep your screens organized in the same way. I had a number of questions over the weekend about trading plans. There seems to be a resurgence of people realizing the power and the importance of writing a trading plan. And I really want to press this on you. You know, so many of you are just literally watching trade by trade. Did this trade make a profit? Did that one make a profit? Did you make a loss there? Did I make a loss there? Did that? Look, stop. What you want you to realize off the bat here is that in the trading game, the results that you will achieve come from the hard work that you put in. It's all going to be based on your confidence with your trading. And that's really going to be based on your reputation of yourself with yourself. And your reputation of yourself is built by sticking to the plan, sticking to the routines, and doing what you said you were going to do. So many people are hopping between different trading strategies all the time. They're looking and they're glory seeking those trading results, and they're literally hanging their trading future careers on whether there's a profit in a column or whether there's a loss. You've got to zoom out and take a much bigger view of the whole system and not to worry so much about the tangible results right now. I want you to think more about who you are building between your ears, who you are building inside of you. You should know that every cell in your body changes at least every 3 years. Every single cell, every muscle cell, every tendon cell, every bone cell is regenerated and changed every 3 years. So effectively, the whole mass of you changes. In other words, what you are today in 3 years' time will be something completely different. So really, when you define who are you, well, that's really the thoughts, the feelings, the ideas, the concepts, and really the standards by which you live by. And that means in the trading game, it's all about, look, everything in you around you is going to change. All the molecules in your body are going to change. All the cells are going to change. But the thing that really defines you as a winning trader is, of course, the principles, the values, the beliefs, and the rules that you live by. And that should all be held within that trading plan. So it's a word of encouragement to some of you out there who are desperately trying to make money in this period of lockdown, in this period of being at home or building your trading career from your own trading dens, wherever you are out there. Just remember this: every day you follow that plan, every day you keep to your commitments, every day that you just push against making you better is where the results come from at the end of the day. Stop looking for quick instant results just to make yourself feel better. Have a knowing that if you put the hard work in, if you continue to build that plan and stick with that plan, those results will come. So just say that, because I know there's a few of you out there who are like, did I make a profit on this? Or they're worried about, forget that noise. I want you just to really refocus, come back to the plan, and make sure you're following that plan consistently. And that really is what's going to build you in the long term. And then take a 3, 6, 9, 12-month view of your plan and your results, and then really measure yourself up and see where you are. And hopefully through the course of that period of time, I can help guide you a little bit. I can show you what I'm doing, and hopefully together we can build a better future for all of us. So that's really my outcome and my goal for you this early July month as we kick into what is looking like to be an interesting month ahead. There's lots of things happening out there. I'm calling second wave coronavirus pretty much everywhere. That's what we're seeing. Or that's certainly some of the intimates we're seeing from different parts of the world. And I wonder how that's going to affect the world at large. FTSE 100, I think, is going to sell off a little bit. It's had a rally, as we know. We are between that 50 and that 200, or certainly on the daily, we're above the 50, but we're still under the 200. That 200 period moving average, if you look at the right-hand side of my screen here, tells us a story. And that story, of course, is that it is being propped up on top of that 50. The 50 line there is about 161 kind of 80 level. I think we can get down to 61.78. If we go over to this on the left-hand side here, this is that channel, that's just that first hour of trading on the FTSE 100 now. So let's have a look at that FTSE 100 level. I'm going to bring my, so we can see the breakfast breakout short. Now look, it's on a 5-minute chart. Don't worry so much about the 50 and the 200 on that 5-minute chart. But the 61.77 is like a level that I want to check with other time frames just to give you some clarity. So if you look here, that 61, let me just bring this up here and crosshairs. So 61, 62. So, and what I'm trying to say to you is we expect that on the daily chart, that 50 period moving average to provide some support to obviously the FTSE 100 index. But it's within that. In other words, what I'm saying is we can afford the drop from here to here. There is resistance right along this line, which is where it's at right now. The breakfast breakout is calling a little short movement. It is from 62. Hold on, let me just see if I can zoom in a little bit there. You can't Zoom in. Okay, so if I look at my entry level here, it's calling an entry at 62.45 with a run down to 61.77. That's a decent move there. Let's bring, and that is within the that is within the support of the 50 moving average on the major daily chart. And of course, I'm looking across to the daily chart to the right-hand side. So the question I'm really asking here is the FTSE 100 topping out? Potentially, yes. We can see that this morning. It's now running its way back down to the main pivot point line on the 5-minute chart. We're looking for a break, therefore, below that first hour trading range this morning. So I'll be looking at going short on the blue dot. It's within the thresholds on the daily chart, meaning it can run to that 50-period moving average. Not trying to breach past that, which means there is a profit potential between there, but the entry wouldn't be until we kind of break through that 62.41 level. So let's make the chart nice and big so you can see it. Placing a short here, and it says, okay, 62.44 is actually the entry level. 66 pips lower at 61.77 would be the close of that short trade. That gives us a good 66 pips. Similar on the upside, the stop loss would be at 63.10. If we green button that trade is going to be locked in. You can see there's some further weakness on the FTSE 100 as we speak. I'm expecting that to happen across a few of the indices this morning. And let's just now keep that in mind. That should now be in our pending trades. Let's just check our pending trades, and that is locked in. So that will trigger as and when we hit that sell entry at 62.44. I'm going to keep my eye on that this session. And I'm going to jump right now into 180 phase changer territory. I was looking at that on the alligator early this morning. Now we talked about that weakness on the Kiwi, on the Aussie against the Kiwi. You can see here, if I look at the jaws starting to open up on the downside, if you remember the top of the jaw, the lip and then the top lip, that is now opening up to the short side on Aussie Kiwi. You can see there is an entry here called, and this is the 180 phase changer. Remember, if you're in a situation whereby you have got conflicting signals, let me just tell you why I'm looking at 180 phase changer and why I'm trusting SmartCharts to do my trading for me this morning is because we've got mixed signals across some of the majors. Just to prove that, if I go to Aussie itself, if I'm trying to find myself a strategy, well, look, I've got on the 1 hour chart and I've got the 4 hour chart. I've got different signals. There's nothing really. We've got topping out signals. We've got on the daily chart, we're above the 50. Did cross above the 200, which would normally be seen as a bullish signal. We've got a little bit of weakness now kicking in the Aussie after it's topped out this morning. Going to look for a run maybe towards that main pivot point line. So we've got some mixed signals on that. Euro. Moving across to the euro, we can see 50 again is above the 200. You're in long territory, but you haven't got any trading signals from what I've got on the screen. Same thing with sterling, jumping across to sterling. Now we know with sterling, let me just click that, obviously missed it. There we go. Yeah, so with sterling, we've got the 50 below the 200. We've got price sitting just neatly on top of the 50. It hasn't really moved much from last week, kind of going sideways a little bit, waiting for a reaction this morning. From a trending point of view, alligator lines, as we can see, are opened here. That's that alligator signal on the bottom. There's no strategy there, just sitting neatly above the main pivot point line. So I'm going into my 180 phase change of the trending moves. I'm going to jump into that right now. First thing is Aussie against the Kiwi. We had a signal. There we are. there's our short signal, which let's just bring that chart up a bit bigger. It's saying an entry here, which as we know is at 106.24 is what we're saying our short entry's at, with our stop at 106.52, a run down 27 pips to want to break in the big figure down to 59. We like this position for a few reasons. First of all, we're going to break this cluster here, and that's really going to be quite important. There we go, I've just moved that up. When we break this cluster here, a little drop down here, it does look like it's got legs. It can certainly go all the way down here. There's no major support down here. So there could be a free fall move. Let's get that trade on. Add that to the Aussie Kiwi. And then we have, and we're going to go through the list now. And as we go through the list, here's what I want you to be aware of. On the top screen, we've got the alligator, which is showing us the trending move. A bottom screen, of course, is the trading screen, the entry screen. Let's go through more of that. So we've got a short position being called on Euro Swiss on the 180 phase change. We've got the jaws opening. I'm going to bring that chart up nice and large so you can see it. There we go. Short position being called here. We can see the sell entry, stop, take profit. I go back. I can see that's well within range. I like the position. I'm going to put that one on and I'm going to hit confirm. Again, my alligator jaws are open. Euro Swiss is being called. Like that move. Let's look at Euro Sterling. Euro Sterling. Again, look, very flat this move. We haven't got the jaws opened properly. Don't want to take that. Euro Kiwi. Again, this could work out, and this could work out well. The jaws are clearly open. You've had a decent run and a pullback to the major moving averages there. This again is on the 4-hour chart. The entry, if we look, and I'll certainly move this screen around, is very, very simple. Breaking that clustering at the bottom, liking that. So we'll get a cluster breakthrough there. We've got a 58 pip run. Stop loss 58 pips above. If we break this cluster here, looking back in time, certainly is a good potential to get this position on. Let's just make sure that, yeah, we break through there. Jumping now and looking at trend waves. So I'm now moving away from my 180 phase change, just to give you an understanding of my trade list, if you've been paying attention. I have got that short position on the FTSE 100, waiting for that to break through. We haven't got a breakthrough at this point. We're just sitting in that range, so nothing has broken yet. We've got a little kind of bounce reaction, but until it breaks through there and gets through that 62.44 level, there's not going to be a trade on. In terms of, and this is a lovely part of SmartCharts, is being able just to review your trade list. So my Aussie Kiwi, again, is a short position trade. My sell entry is at this level here, which is 106.24. Ignore the last 5th decimal place. We just put that in for accuracy, but actually it's up to 4 decimal place. The 5th is irrelevant. We've got a 180 phase changer on the Euro Swiss. Again, that's another sell position or another short position. That's a 106.31. Again, ignoring the 8 at the end. That's just the 5th decimal place. Somewhat irrelevant, but relevant for those of you who like to look at 5 decimal places. And then finally, we've got the Euro Kiwi. Again, another short entry there. So we're taking some short positions on the Euro against the Kiwi and the Swissy, and the Aussie against the Kiwi, remembering what I said earlier on about the borders in Australia. Jumping back now to my charts, and I'm looking at some trend wave positions, but I want really good clarity. So I'm looking at Swiss yen. It's a pair I've been trading a lot in the last 6 months. It can be very predictable, can be very powerful, but we want to make sure that those alligator lines are clearly open on that higher time frame, which is the daily time frame. Nice and open here. We've got a nice long entry called on Swiss yen. Let's see what the position lines come out at, which is, again, that 114.27 level. So just breaking through that cluster here with a nice short at the bottom of that cluster above the moving average lines. If it can make that move, it's had a pullback slightly from the ramp that it had last week. This is on the hourly chart. It is a trend wave position. We're looking for, look, 23 pips is not a massive move, but that position is going to be on. And it does comply with the alligator above. So remember, we're always looking up a higher time frame to make sure that we have got nothing in the way that could prevent this trade from happening out. What's useful with SmartCharts is when I then do place that trade on the lower time frame, I can see how it matches up on my higher time frame. So look, I've got my buy entry here just above this clustering here, and then taking the profit just here. So I'm just trying to nip 23 points. If that position works out, then we hope for a decent move from that. Let's have a look through my trend wave positions. Now remember, because I've scanned for a trend wave, my order ticket on the right hand side will be showing me those positions, so I can easily just click through. And as of course I've series linked these two charts, they've both got a red dot next to them. It means whatever I'm doing in this chart, it will then automatically update what's happening above. Now you might say, well, I like the look of the Euro CAD, but again, I don't like the look of this clustering on this, or this closing of the alligator mouth. That's not a good that's not a good trending signal for me. A trade has obviously just kicked in. I'm going to check what that is. That's that 180 phase changer on the Euro Swissy. That's sell entry. So that is just starting out. Don't worry about the profit and loss at this point. Remember, those of you who stare avidly at profit and losses, do that at your peril. This really is the spread. Remember, this is a large $11 million account, £11 million account, beg your pardon. And I expect spread to be within that range. Spread should be a few $1,000s. So when this trade gets moving, we're looking for a take profit down here at this 10609 level. So hoping that works out, but you know, you can't bank on hope. We've got to make sure that we line the game up and play the game as effectively as we can. So back to my charts. And moving on through this list of trades. So we are, again, we're just keeping fixed now, trending. Only when the alligator's open. On the Euro CAD, it was not. Moving on to the Euro dollar. Euro dollar, I'm going to keep away from, again, because of the closing of the mouth. Sterling Swiss, look, not a lot really happening here. However, this does have a position for me, and this is why. If you notice, the mouth is nice and clearly open. If you look at the short positions of sterling now against the Swiss franc, we're breaking this clustering of price here. Remember, this is on the hourly chart, so if we do get through this clustering of price here on this blue dot, we've got a pretty good free drop here all the way down. So I'm going to open this up. We've got the agreement, as we know, from the alligator chart on the daily, which means that there is likely to be a good run down. We take a short position on the trend wave, which is 25 lots. We're looking for about a 27, 28 pip move. It's well within our range. Nice protective stop loss above the clustering up here. This price action seems to find a very strong line here. If we actually move this stop loss just a little bit higher, we might be taking a little bit extra risk. But I can counter that by taking a little bit of extra profit here. Remember, it's well within these guidelines, well within these stops and, well within these support and resistance limits that present itself in terms of price action on this chart. Hit OK on that, and that trade is loaded in. Let's have a little swing back to the FTSE 100, see what's happening on that position. I don't think much is happening yet. And we certainly do have just uncertainty as we are ranging along in the UK 100 market. So, of course, that gives us a good indication as to where things are moving in the UK at the moment. The only trade we do currently have live is this one, which is just getting going, but not really moved very much yet. If I just change my chart around now, remember, change that grab tool, I can pull it back up and see exactly where I am. It's pretty much where we entered the position short. You might think, well, how come you're down 890 pounds? Well, of course, that's just the spread on a much larger account. We're waiting for that to move and hopefully get down to this level, which is consistent with the strategy. Again, of course, we're trading 180 phase changes this morning and we're trading trend waves. Why are we doing that? Because we're looking for that trend flow movement and we're using SmartChart to find the trades for us. Why is that? Because we've got conflicting signals. We've got conflicting signals from higher time frames and lower time frames. So we're really letting SmartCharts drive for us this morning and see where we end up. Where we end up will be based really on what that higher time frame is dictating and making sure that when we take trades, we're smart enough, as we have done throughout this morning, is to look at the higher time frame, look at the indication. For example, this alligator movement here, jaws open, trade is placed, we move on. And most importantly, if you like the video, don't forget to hit like. If you're not subscribed to the channel already, get yourself on the subscription list. Until then, this is me checking out from the trading den. I look forward to seeing you here later on in future videos.
Want to get a stock worth over $400 for free? Prove you deserve it and it's all yours. You can get a free S&P 500 share.
Hi guys, Greg Secker here. Welcome back to my channel. Now listen, how's your trading journey so far using the Ultimate Trading Plan? Now if you haven't already seen that quest before and participated in that quest, get yourself over there and get doing that, because that is the real starting point for your trading journey, having that Ultimate Trading Plan. And some of the trading plans I've seen are incredible. Some of you have stayed up doing a 5-hour slog and literally put together what are really top draw trading plans. So this YouTube channel for me is really adding some benefit out there in the world, and I really feel proud of what we're achieving here as a group of people. So thank you everybody for participating. It's making it all worthwhile. We're now getting ourselves into like another quest, just so you know, because I've been bombarded by messages, requests for the past few weeks to share how I manage effectively all of the things I manage. You know, as you probably know, I've been a currency market trader for the last 25 years, nearly 24 and a half years or something like that. We'll call it quarter of a century. But I also do other things as well. For those of you who know, I'm not just a trader, I'm an entrepreneur, I'm a philanthropist. I sit on the board of a bunch of different things, and of course I'm a dad to 3 kids, so I've got my hands kind of full, as you probably imagine. But as an entrepreneur, trading of all the businesses is number one. And the reason that's number one is, first of all, you haven't got all the tax, legal, regulatory, filing, all the stuff that goes with people management, that goes with running lots of businesses. While I love working with people and doing amazing things, in this period of time, the trading is a no-brainer. I mean, this is literally the only recession-proof business I can think of. You know, we're looking at the airline industry, and we're looking at basically the whole of the travel, transport, and holiday tourism industries going down the chutes. There's challenges out there for all sorts of industries. Trading is completely different. In fact, this is probably the most promising business right now, despite the lockdown. So today, I am going to reveal the secret source of all my successful multinational businesses out there, which is the 6 Sigma approach. Now, if you're not aware of what the 6 Sigma approach is, I think you're going to find this to be an incredible quest. Broken down into a 3-part series, starting today by following the 6-step trader cycle. We're going to be covering that right here, right now. What is 6 Sigma and why is it so important to business? Let's just start there as a mindset. Well, why do you think companies such as 3M, ABBA, Apple, Microsoft, General Electric, Ford Motors, NASA, and many more invest in training and learning about 6 Sigma? Why do they all do that? Well, 6 Sigma is a method that provides organizations tools to improve the capability of their business processes. They realize the value implied in their team and in their organization is all based on the effectiveness and the efficiency of their systems and processes, which effectively underlies what a business is. This increase in performance and a decrease in process variation helps lead to effectively defect reduction and improvement in ultimate bottom line profits. In other words, the process of eliminating the error. Just think about that for a second. The process of eliminating the error, allowing you 3 or 4 errors per million opportunities. In trading, it's all about winning big, losing small by following the 6-step trader cycle. Now, for those of you already subscribers to SmartCharts and you've gone through some of the learning process, you will have gone through the 6-step trader cycle. It underpins the whole training that evolved from and within SmartCharts, which became the Learn to Trade and SmartCharts Trader Training Program. So that trader cycle is implicit within there. Now, for you to call yourself a trader, you should know the meaning behind the word trader. Think about that. T-R-A-D-E-R, trader. I created this step-by-step guide using the word trader because it's helpful, it's easy to remember, and it's a process. And the game here is to reduce the errors, increase the predictability and the effectiveness of this process. This is going to be the underbelly to who you are, what you become, and how you perform. Let me break it down for you. So the T in the word trader really refers to trend. The R refers to relative price. The A is additional analysis. The D is decision. The E is examine. And then finally, the R is review. For those of you who've watched any of my videos in the past will realize that I often put a 200 period moving average on my chart, on a daily chart, to let me know, is this market in an uptrend or a downtrend? But it's really important before we start off to know where the market's bias is. Is the market making lower lows? Is the market making lower highs? And if so, we're in a downtrend. But is the market making higher lows and higher highs? Then we're going to find ourselves in an uptrend. But starting off, our first step is to chunk up from anything we're considering doing in the trading game and looking at where is the major market tide moving. Is it moving from east to west, or is it moving from north to south? In other words, are we in a buyer's market here? Is the market force, pressure and intensity producing higher highs and higher lows? And then effectively we're pulling more markets. Is a market bias towards buyers, or do we have a market bias towards sellers? Markets are making lower highs and therefore lower lows. It's critically important that whenever we set our charts up, this Six Sigma of Forex trading, step one is we aren't doing what those beginners are doing, going in and having a punt based on some crazy idea we may have picked up. We're not doing that whatsoever. What we're doing is we're having a market bias lead our direction, lead our decision making. So we know this from our trading plan that we always build in trends straight off the bat. You'll notice when I pull up my 4 screens on SmartCharts and I show any kind of trading I'm doing, whether that's going to be a breakfast breakout, whether that's going to be, a pivot trade, whether that's going to be a 20 bounce, whether it's going to be any of the strategies I've been profiling to you of recent times, I always start with my chunk up. So what does the daily and even the weekly say for that particular asset class? And when I look at what we call the price structure. So price structure, of course, is where markets are just not making any lower lows. In fact, the lows keep getting higher and the highs keep getting higher. That means there's buys in there. So therefore, I start with my step one, which is my market bias, which must be dedicated and it must be completely focused on the market price structure. Nothing else. We look at price structure. We look, are we making lower lows? Are we making higher lows? Are we making higher highs? Or are we making lower highs? And by drawing the trend, connecting the 3 points at a bare minimum along a perpendicular line, which suggests there is either a bias towards buyers or sellers, helps us start our process and filters and focuses our thinking based on a bias. If you don't have a bias, you don't have a plan. If you don't have a plan, you don't have a control. If you don't have a control, you're trading in chaos. And that will only result in one thing: disaster.
Here are 3 pieces of advice from eToro users on how to trade safely during a period of increased market volatility.
A break! Pull the red handle!
We need to get you to a place called order. An amazing author by the name of Jordan Peterson wrote a groundbreaking book all about the 12 rules, where he talks about our life in order or chaos. We have to have guidelines, we have to have reference points, we have to have discipline, and we have to have something we can stick to. If we're going to allow the bias between buyers and sellers shift very quickly based on a tip we may have gotten, based on some impatience, based on some of those unconscious, incompetent gremlins which may still be perseverating in our brain because we haven't tamed the monster. The concept of a market bias and understanding how important it is as step one to realize the trend direction and realize the bias from a higher time frame, and then how that dictates to the lower time frames where you will be placing your trading activity is going to be critically important. So step one in this is trend. How do we do it? Really simply, we plot time along the bottom, we plot price up the side, we go to our daily or our 4-hour chart, and we plot a trend line across either the peaks going down on a downtrend. That's where you're getting lower highs and lower lows. Or we're going to be plotting a trend line where we're going to be connecting those higher lows and higher highs, because of course we're going to have a market bias towards buying. So this is going to be critically important as we start. So our step one is connecting at least 3 points which are in a trend line, which are effectively showing us our market bias, and then should be dictating which side of the market we're on. Think about how important that is to make sure that you've got the flip toss, the buy or the sell in the right order, and that must come from being process driven. So our step one is to always start our bias from trend. Remember, when you start learning trading strategy, your brain is going to get so immersed in that trading strategy, you're going to forget to look at the higher trend. Every single trader I've ever met that's come on our trading floors, whether they be trading floors in Sydney, in Johannesburg, in Manila, in London, no matter where we are with you, this always happens. People remember its trend, then they get so fixated, so tunnel vision on a particular strategy because it's yielding them great results, they forget to look at that change in trend. And trends are changing weekly. You know, we're living in a market now where suddenly the trend for oil is back up. Then previously it's been in a terrible negative territory. The world is changing around us, so we must be omnipresent in our minds about where trend is. So that's step one. We connect the 3 points, 4-hour time frame, daily time frame, know where the bias is. I hope I've got that imprinted in our minds. So now let's look at step two. Step two of the Six Sigma of Forex trading is about the concept of relative price. Here we analyze the relative price in the market condition using price levels as well as bar and chart patterns. So it's kind of like you've started from 50,000 feet and now you're getting a little bit more precise and a bit more precision. So we start to look at the constructs of price. What do I mean by the constructs of price? Well, for example, you're all aware of what a simple bar chart looks like. You have the opening price, you have the high, we have the low, and we have the closing price. No big deal. If the opening price is lower than the closing price, we know that the market's gone up and stayed up for the day, and the inverse is true. If the market opened up high and dropped lower and closed lower relative to that bar, we know that there are going to be more sellers in that range or in that period of time than there were buyers. That starts us off. But of course, the most important thing to be aware of in relative price, now we've got a trend direction, now we've got to skew that with where is support on this chart? Where is price being supported? Where is price being resisted? What kind of bar structural patterns have we got? In other words, have we got small bars, very low volatility, or have we got bars which are swinging all over the place with crazy volatility? You want to see crazy volatility? Look at the chart for WTI crude in the last couple of weeks. You're going to see crazy volatility out there. Very difficult for traders to trade crazy volatility because when you've got big bars all over the chart, you haven't got a safe small bar range to stick your stop loss under when you're placing for example, a long trade. So markets that swing around all the time with crazy volatile bars, that kind of relative price says to you, you are in the land of the Wild West. And we have been in 2020. 2020 is the year of hindsight, right? You can look back on this year and go, geez, we had flames burning this beautiful planet of ours across Australia, across Brazil, across South America. We had at one stage 112 countries on fire at the beginning of 2020. Then we've had this crazy pandemic virus which has wiped out the lives of thousands of people around the world and literally shut down our planet. Then you've had crazy market volatility. You've had the oil price go negative on the May futures contract. Never happened in the history of time. The May futures contract went negative $36. That's unbelievable, unprecedented, unheard of. The cash price on the spread bet Forex for WTI crude was under $5. It was $65 on the 8th of January this year. That market has tanked.
More roofs to repair, more houses to clean, more boilers to fix. When it comes to your business, you can always do.
Billions have been made and lost in this period of time, but the relative price that is consistent with that is going to be crazy. Now, you, as somebody who's following me, your place on our channel following this process will know that a trading plan wouldn't allow you to trade and put stops in a crazy market condition like that. So relative price, after we've noticed the trend, we've got our direction. If we're buyer or seller, you've got to know after step one, am I in the buying camp? Am I in the selling camp? Pick your side. Don't be somebody who's sitting on the fence going, well, if it looks a bit bid, I might buy, but oh, actually, if it's looking a bit weak, I might jump on the short side. Forget that noise. You've got to have a structure to this now. We've got to have a process to this, and we've got to have some bit discipline, and we've got to stick to it. Now's the time, guys, while we're sat at home in front of our screens, learning these skills, these tools, these strategies. Now's the time to get this game together. And that means step number one, we've got to pick that market bias. Step number two, now I'm in the 1 hour chart frame, right? I've dropped down from daily and 4 hour. I'm in the 1 hour. Now I've got to say, right, what the hell is this map look like? Now, has this map got clearly defined trends with price patterns whereby I can identify certain patterns quickly and easily? Is the market responding the way it normally responds? If I get a low test bar and it looks like a big long tail off a normal bar, this is where markets have opened up, really tested the downside, but then sprung back. That creates a big long tail. Now, following a bar pattern like that, we would expect the market to then rally. But then check in with yourself. Relative price, is it doing that? Or is markets just going bonkers? And they're not following any of the regular patterns, principles, structures, systems, and setups that we're used to. If that's the case, we've got to amend our approach. So relative price becomes very important. We've now got our bias. Don't make the mistake of picking your bias off price. Crazy. People look at a couple of price constructs. They think they see a pattern. They've forgotten step one. They've forgotten that the force of the Titanic is going down and you're buying. So you've got to look at where the groundswell is, where the market bias direction is. Then we're looking for gremlins on the chart. And your job should be the power of negative thinking. You should be asking yourself a question, how the hell could this go wrong? Let's look at price. Where's support? Where's resistance? What is the average true range of price right now? How much volatility is there? Can I sensibly put a stop loss within 30 pips without the prospect of getting stopped out within a 12-hour period? And these are concepts and considerations that we must embrace and we must bring into our armory. So my takeaway for the first quest in this brand new quest, and I hope you're loving it, please do comment into, and by the way, here's what I'd like you to do. I'd like you to take 5 of your favorite markets. So whether that be the currency markets, whether that be indices, whether that be options, whatever they are, but let's see if we can stick this to commodities, stock indices, and currencies as our 3 main asset classes. Perhaps in the comment fields, you'd like to write down where the bias is for all of these. Are you long? Are you short? And then review when people look on this comment. If you just put in euro dollar and you put buy and somebody else put sell, then you should discuss that. Why do you think one of you think there's a long bias and one of you think there's a short bias? From the training that I'm implementing on this YouTube channel, you should all have the same answer if you're all following the same videos. Okay, so that's critically important. Do you guys all agree on the bias for the top 5? Put down euro dollar, British pound against US dollar, dollar yen, dollar Swiss, and then take Kiwi and then take dollar yen and maybe Aussie dollar against the US. So there's 7 or 8 currency pairs there. Take a number of the S&P 500, the UK FTSE 100 as a starting point, and then stick some commodities on there as well. Put some gold, silver, and maybe a bit of oil. And then ask yourself the questions. Are these long or short biases? See what you guys think. Put that in the comments field, because this is a quest whereby we're now starting to integrate some real processes, which is the underpinning of some of the best businesses in the world, some of the best masters in the world, and certainly some of the best traders in the world. Now make sure you tune in for part 2, because part 1 here has been about making sure we bow down to that major trend direction, and then we start getting into relative price, support, resistance, gremlins on the chart, volatility of the bars, and any price patterns or price structures that we must be aware of. Remember, that doesn't make our decision on direction, trend does. After that, We're looking for relative price to make decisions about the ordering. Where do we get in? Where do we place our stop loss? Where do we take our profit target? Is there a certain plan to this trade which needs amending based on current market conditions? Now listen, make sure you tune in for part 2, where you're going to learn about the step 3 and step 4 of the trader cycle. So if you're not sure what they are, well, of course, that's going to be additional analysis and it's going to be decisions. If you like this video, please hit like. If you're not subscribed to the channel, now would be a great time to get on my subscription list. Thank you, by the way, all of you guys, for your amazing comments, your feedback. I really appreciate the level of interaction that you're giving me. For me, this is, I used to speak on stages all over the world, teaching people, but I'd have to get on an airplane for 30 hours to go to Australia and teach a bunch of people how to do this. Now we have the studio set up, and it is my real gift and joy to be able to communicate these thoughts, feelings, strategies, and give you guys tools in a way where you can consume them as part of a process to help you get better. Any questions you have, any things you want to see in the future, please put those in the comment fields too. And for those of you, of course, that have been watching me use SmartCharts, here comes the shameless plug for SmartCharts, but it is a shameless but a helpful plug in that it gives you a 7-day free trial of SmartCharts. If you are a current subscriber to my YouTube channel, you'll find the link to that in the comments field. Until then, I look forward to seeing you in the second part of this quest, which of course, this quest is really all about improving you and building you and using the skills and tools from the 6 Sigma approach to business process management and how that creates a 6-step trader cycle, which is the 6 Sigma. Now, if you haven't heard of what the 6 is, oh, hold on, hold on. What is 6 Sigma? Let's start again.
Free Tesla stock? Prove you deserve it, and it's all yours. You can get a free Tesla stock from a leading European stockbroker. If you win this challenge, Tesla is one of the most exciting, innovative companies in the world, and you can own a small bit of it for free just by winning a 5-day trading challenge. All you have to do is successfully trade a simulated demo account. No deposit, no commitment required. Join millions of other investors worldwide by owning one of Tesla's stocks. Do you think you can make it? Click right here, right now, and join the competition.
Hi guys, welcome back to the Trading Den. Well look, we are halfway through a quest. Today is day 2 or part 2 of the quest, and of course the quest was indeed the 6 Sigma of successful currency trading, that 6-step trader cycle. And if we can recap from yesterday or part 1, we really looked at that trader cycle. We looked at the T and the R of trader cycle, which of course was trend. Remember, and I really enforced the point, I hope you got that from part 1, was that trend dictates everything. So we must look at where that market bias is. Are we having higher highs and higher lows? Are we in an uptrend? Is there a market bias towards buyers? We must pick our bias, and that is critically important. We can't forget that and then get into the detail of the trading strategy and forget to see the iceberg when we're in the Titanic coming towards. We've got to make sure we are aware. Where is that market bias? Where is the power? Is it in the lap of the sellers or the buyers? We need to know that by looking at T for trend. That's really important. Then secondly, we said in the first part series, we looked at relative price, and we said, given that we're in a buying market now, what is the price structure like? Are we breaking out? Where's the support? Where's the resistance? Where are some of those gremlins on the chart? And then today, here we are in part 2 of the 6 Sigma 6-step trader cycle, which is step 3 and step 4. And of that trader cycle, that's additional analysis and then it's decision. Do I buy? Do I sell? Do I do the trade? When we're doing an additional analysis, before we set the charts up, we've got to remember that analysis comes from really 2 flavors. You've got fundamental analysis. What is being told out there? Are there news releases? What is being said? And we should be aware when certain news releases are coming out into the markets. We should also be aware of what technical things, what technical elements we need to be aware of, the analysis of price levels, technical indicators, ATR levels, volatility. So if I jump into SmartCharts right now, you can see that on this euro sterling chart, I've also put in news. One of the beauties of SmartCharts is it actually integrates the news feed and puts it bang onto the chart. So literally, if I look at euro sterling and I click on this red line here, it says, look, this news release is coming out. This is the ECB President Lagarde's speech. It's from the European Monetary Union, and it's coming out it came out on the 8th of May at 2 o'clock, and tells you what it's about, and then it gives you the data. Now, it's important that we know when certain news releases are coming out. That's the fundamental, but we're making our decisions from really market structure, and that's what I'm going to show you to do right now. So this is a pivot trade. What I mean by that is, if you look at how I've got the screen organized, in the top left, I've got the daily chart, and I don't even care to look at bars here. I've actually turned that chart, with SmartCharts, of course, you can change the chart type to be OHLC's bars, candles, hollow candles, you name it, line, Renko, the whole point and figure if you really want to get down to it. But for this, I like to have my screen set up as euro sterling, as the daily chart there, so as a line chart, just give me the trend direction. I now know the trend is moving back up. So my bias is, yes, my bias is therefore long. However, we can see that trend is just coming back, which means if I sort of look at then the hourly chart, which kind of gives me a bit more price action range, are we above the 50 and the 200? Well, you can see we are here, great. So that's a bit of additional analysis. I can then say, well, okay, what is volatility like at this point? So I can add, if I wish, my volatility indicator. I can add that to this chart. So let me press the right button. And if I come into here and I type in ATR, for those of you that haven't seen my videos on the average true range, showing you how much markets are moving around at this given point in time, please make sure you watch that. There are some really important bits, tips and tools to help you really understand the ATR. But if we put the ATR, and I just put that to 10 periods, not 14. So I've now got the ATR 10. Look how the euro sterling has gone through very much peaks and troughs of volatilities. So it's quite interesting to look at where volatility is right now, how many pips we need to put our stop losses about. And we can see there that our stop losses need to be around at least 13 pips away from current market price, certainly on the hourly charts. That's really going to be important, making sure that we have taken really into account the stop loss movement from our position. Now, on that point, we then move to the 5-minute chart, which is our pivot point. So I'm now using tools to help me out. I know where my stop loss should be based on my ATI, how many pips away. I know that my bias is long. Euro sterling chart shows there are more buyers than sellers. Now I'm coming into, and I'm going to make this, I'm going to kind of stretch this up a little bit so you can see it. My euro sterling, this is my action chart. This is where I make my decision now. So I'm looking at as much additional analysis as I can. I'm looking at my MACD, my MACD. We covered that recently, an indicator here on this channel, which shows you when should I be buying. And it's just when it's in the zero zone, just breaking up, which it is here, just above that, breaking through the pivot at the same time. Now we know that a break above the pivot and a stay above the pivot gives us a trading strategy where we can target resistance level 1. That would be this green line, and potentially resistance level 2. That would be this dotted line. Now we're going to use other parts of this quest to show you really how to manage this trade. But let's say we are entering here as we break through the pivot. We've certainly got agreement, have we not, from the major trend of euro sterling. We can certainly see on the hourly chart, we've got our stop loss placement, so that gives us the additional analysis of how far this thing can really go, and we can see as far as this level here, this is how far we can go. We also look at the execution straight through that pivot line with a agreement from the MACD line, which says they are separating. So we're grabbing all the little pieces of information that I've been putting forward on this channel and really slotting them into place to really give you a solid understanding of how I should use it. So of course, step 3 is this additional analysis. I've got my agreement for my daily, so I know my bias direction, check. I'm now looking at volatility, how much the markets are moving around. You can see this very interesting euro sterling ATR print, which says it's crazy, then it's not. It's crazy, then it's not. It's crazy, then it's not. It's the world we're in right now. So you can see currently where we are. If you look at the predictability of the ATR, you know this is going to move around a little bit more. So we've got to make sure that our stops if it's consistent with any of this pattern we're seeing here with ATR 10, give it a wide berth is probably a good old phrase to incorporate at this time. Give us some wiggle room. So step 4 now is the decision. Do we place the trade? Do we not? In order to do that, we've got to go back to the rest of the plan, which of course is TRA before D. So trend. Let's check that off. And let's kind of think about this as kind of like a pre-flight check. So first of all, what is my bias? Am I a buyer or am I a seller in current market conditions? Go straight to the trend. My big market trend says your market is making higher highs and it's making higher lows. You can see that the euro sterling chart here is starting to trend upwards. If you now look at the 1 hour chart, notice this. This is the low. It's making higher lows each time. Notice it is above the 200 and the 50 period moving average. That's important. But we can also just quite simply draw trend on here. So if I click trend lines and trend line, and I click from here to here, you can see that the market is making, of course, lower. It's making higher lows and it's making higher highs. That is showing that, and we've got the market price again now switching across the 50 and the 200 period moving average. So of course we tick trend. So that's the first part of our, our pre-flight check. Where's our bias? We're buyers. Let's look at relative price now. Well, okay, so we are looking at our execution chart. We're looking at where our previous levels of support and resistance were. We have got a run potential as we go through. So I now bring up the euro sterling chart here, and I've got my crossover with MACD. That's a buy signal as the market breaks up, retests, and then holds on that pivot line. And we know we can go to R1, R2. R2 is about 50 pips away. So of course, that additional analysis by using not only pivot lines to tell us a pivot break, but we're looking at the 50 and the 200 break above on that 1 hour chart. We're looking at the trend on that 1 hour chart, noticing how it is in an uptrend. So we've got these additional analysis which says to us, okay, the decision then is to trade or not to trade. Our decision here is to trade because we haven't got obstacles in our way. We have got a place where we can put our stop loss underneath. That, of course, will be underneath the main S1, support level 1. And so we now have the triggers, both the agreement from the daily, the 1 hour, the trend on the 1 hour, the trend on the daily, the price on the 1 hour above the 50 and the 200, we drop into the 5 minute. And of course, we're using pivot point lines to say, well, we break above that pivot. For this session, we're long. It's consistent with everything else. The stop goes underneath S1. That's underneath that red line on the 5 minute chart. Our target is at least R1, if not R2. And so what I'm going to do is by using this trade example, I'm going to show you that in part 3 of this all-important 6 Sigma trader cycle quest that we are on right now, where I'm going to take this further and do the last 2 elements of that trader cycle, which of course are examine and review. Now listen, if you like this video, don't forget to hit like. If you are not a subscriber already to my channel, jump yourself onto that list. We do produce 2 videos a week and I promise them to be high quality content. If you have any questions, challenges or comments to make, please do put them in the comments of this video. Until then, I look forward to seeing you in part 3.
I am what I live. My way. The new fragrance, Giorgio Armani.
Hi guys, welcome back to part 3 of the 6 Sigma of the trader cycle. I hope you've enjoyed part 1 and 2. And as a quick recap, part 1, we discussed TR of the TRADER trader cycle. T, of course, was trend. Have a bias. Make sure we know whether we're buyers or sellers. So critically important. If you're going to toss a coin, make sure you know which side you want it to land on. And that comes from the bias, which of course comes from the market direction. And again, if we just jump back at my chart right now, you can see that we were looking at euro sterling in the last couple of parts of this quest. And we said, well, euro sterling on the daily, look here, this is the daily, and it is moving up. We then plotted that trend line, if you remember, on the hourly chart. And we said it's above the 50 and 200. Yes. It is making higher lows all the time and higher highs. Okay, it is in an uptrend. We should be buyers. We agreed that. We then looked in and we said, okay, now let's have a look at relative price. And at that point in time, we said, well, relative price said it had just broken through the 50 and the 200. It was breaking through that very important pivot line, which was our long entry indicator. And we said, well, we could now run that potentially until the market got to either R1 or R2. That's that first green resistance level, or that dotted resistance level 2 line, we said. Now we've moved on a bit and we've moved from part 2. Here we are in part 3, and we made the decision to enter this trade with a stop being below, of course, the red line, which is the support line of the pivot line, with a target, of course, up to R1 or R2. Now, where we are, we're in the last stage, we're in part 3, and part 3 is all about the 5th and the 6th step of the trader cycle, and that stands for E, which of course is examine, and then R, of course, is review. Well, first of all, let's just get into examine. We want to keep an eye on our pending and open trade. So given, let's say, this was an open trade and we entered it, we now have got to ask ourselves the question, would we still enter this trade now? Would we still be long? And what we've got to understand here is by looking and reviewing and asking ourselves the question now, when should we exit? If we now look at that resistance line on the hourly chart that we discussed prior, saying, well, it could run to here, and that is consistent with where it is right now at the R2. If we now look at this line here, we can certainly see, look, you've got this resistance level that is hit before, probably going to reject off that. We know we exit trades when bars are big. Remember, we enter trades down here when bars are small. We exit trades when bars are expanding into a big resistance level. So enter trades, small bars, exit positions when bars are expanding, when they're becoming exhaustive, when all the buyers are fleshing right out, where the distance between the opening price and the closing price is expanded because you've got such a rush. Often you get a whip back, especially when it's running into resistance. Any of you remember the trade I did on sterling about a week or so back was exactly that exhaustion level, which then gave you a short trade on the downside. So now this, you know, it's run its distance. I'm now looking at my hourly chart, which is saying to me, Greg, you're right up against resistance. Yes, you're pushing it, but you're at your R2 level. I've hit R2. I've made myself a 50 pip profit for maybe a 20 pip stop. So if I come in here, I now click on measure and I hit price range. You can certainly see from where we entered this trade, you've got 47, maybe 48 pips in the bag. She's pushing further, as we can see. So how do we now manage this trade? Well, a sensible move from now on in. We could take the money off the table. That is one approach. Or at this point, we've hit a profit target of 50 pips approximately. Market is still pushing on with some strength. What does the trader do in this place? Do you take the money off the table? You can do, but a really smart move at this point would be to move our protective stop loss up underneath the R2 level. If it's going to run a little bit longer, then we've got the opportunity. Let me just show you how that works. Let's say, for example, I was already in this position, which I'm not. I'm just doing this for an illustrative purpose for this quest. But if I was in this, my stop loss, look, I can then do trail price. So I could put my stop loss in, let's say I was already in this position and it was running, but I could put my stop loss to here and I can trail price. So I can follow price. I can look at my ATR 10 and my ATR 10 says you want to be 20 pips, let's say, away. So I can make sure that I am minus, hold on. Sorry, I am minus, you can see it moving my stop loss down. So let's say I want to be 20 pips away from the price. Now you've noticed how that's moved on my chart. So now my review says, Greg, you've grabbed 50 points. Worst case scenario, you're coming out with 48 points. Fantastic. But if this market still has power in it, which you can see, you've got some volatility there. MACD crossed again. It's showing there's a little bit more pressure in this. Move my stop to not break even. We're way beyond that. We're at 48 pips of profit. Now let's trail that price by 20 pips. So as she rallies on, that little stop loss is going to move like a shadow underneath. Any serious pullback from there will then take us out and will capitalize and crystallize the profits on that trade. And you'll see by taking that approach, if there is still steam in the engine, the probability of me capturing maybe another 20 or even 30 points is likely. Why not leave yourself open after you've made your money rather than take the money off the table? You know, we've got the whole week ahead of us. Why not grab the cash and allow yourself to take a minimum of 48, but maybe take another 30 pips? Remember, great trades that work out well have got the power and the propensity to keep going. You can see now, as we're looking at this, the market is pushing up, then immediately rejects back down. That's what happens when you get those bigger bars. If you want me to kind of focus on that, let me just use my grab tool just to really kind of put that in context to you. Notice how that big bar ranged up and boom, straight down again. That's because when you're getting those exhaustive bars up, you get the reaction straight back. Knowing that, of course, folks, all of the time, on that 50, there you are against that resistance line. Look, that market's pushing down. So worst case, you take your 48 pips. Best case, hey, use the trailing feature within SmartCharts and trail current price by 20 pips. Remember, that needs to be consistent with the average true range. So this examine part of the process, and then review is absolutely critical. So that's how we've examined it. That's how we've amended that trade plan based on what's happening. I hope that's been really helpful. And then review, I'm going to go into the journal section right now and just have a look at how my trades have been playing out. One of the great parts of the review section, which is the last part of the trader cycle. And let me tell you this is the most powerful. So you look back at your trading plan. You then come to your trades. You look at your winning trades. You look at your losing trades. So I take my winning trade here, right, which with SmartCharts, at any time you've placed a trade on any market, you'll notice there is a flag icon, top right. Now, if you toggle that on and off, it will show you the trade you've placed, how much you've made. So that trade I did on the FTSE 100 the other day, if I click on it, it shows me I made £16,000, 52 pips of profit. If I click view trade, it will show me the trade itself, $16,000, 250 lots, and it shows me the opening price and my reasons for the trade, any strategy or any comments I put in there, which assists with my journaling. Why is that important? Because first of all, I want to look, if I don't have a coach, I want to make sure that I'm reviewing my trading plan or going back to my trading plan and then taking these set of trading results, the good, the bad, the ugly, whatever, and then comparing the two and say, am I following my plan here? And if not, why not? And remember, we talked about the trading plan before, being really clear about the what you want and then the why you want it. Very, very important. This review part of the process is absolutely critical. Now, I want to invite you to something. If you're somebody that's using SmartCharts and you'll get your trading plan together, I want to give you access in this crazy period of time we're in right now to one of my trader coaches. If you're somebody that would like to go through your trading plan or review where you're at or just have a sounding board, but more importantly, have a bit of an understanding as to what your trader personality profile is, because there's the Six Sigma Forex trading, which of course, which said step one, where's the market going? Step two,